guys, good morning. Welcome to the live session with Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure. Hey everyone, good morning. Thanks for joining. Happy Thursday. Welcome guys. It's almost 11 a.m. Eastern. We're going to get started with our live post New York session following Dave's session. So we're going to get started here in just a couple minutes, and hope everyone's having a good day. Tomorrow, remember, is a tentative NFP, so we'll see if we get it or not tomorrow. Just trade careful, proper risk management to end this week.
Hey guys, good morning, welcome to the live session of Stocks Number Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure. Hey, welcome everyone. Good morning, good afternoon, good evening. Thanks everyone for joining. It is almost 11 a.m. Eastern, and today's date is Thursday, November 6th. So welcome everyone. Thanks everyone for joining us. Today is our live post New York session. We're following up on Dave's New York session, and I hope everyone's having a great day. We're going to get into the markets. We're going to analyze a few charts here, and we're going to see how everything is moving. A reminder, tomorrow is a scheduled NFP, the first Friday of every single month. The last NFP in the month of October got canceled due to the U.S. government shutdown, and we are still under a U.S. government shutdown. So we will see if they do have the NFP tomorrow. It could be canceled as well. So just take it candle by candle. Take it day by day, and we'll see what we get tomorrow, okay? And just a reminder, tomorrow's session will be a post-New York session, so I won't be with you guys to do if there is or isn't an FOMC session, so we'll be doing this time tomorrow again, okay? So if you are going to trade tomorrow morning around 8 a.m., 8:20 COMEX and 8:30 is traditionally when they release the NFP. Just please trade with proper risk management if you guys are going to trade, okay? How's everyone doing today? How's everyone's day? How is everyone? What I'm going to do is I'm going to go quickly over today's news. We're going to do then, when we get into the charts, we're going to start off with gold, and then we're going to move over to either US30 or NASDAQ, and we can watch both of these, okay? So let's all have a great time, and let's get into this, okay? So we're going to start off with Forex Factory real quick. Today, Thursday, November the 6th, there was European news if you were trading the European market. Again, I was sleeping at that time, but once in a while we do the European markets. But if you are trading this, keep an eye on your folders. Which ones are your high impact ones? There was a lot of British high impact news today at 7 a.m. Eastern coming out of Europe. You can see the Bank of England monetary policy report, the monetary policy summary, the MPC official bank rate votes, and the official bank rate. So it looks like they paused in the UK. Previous month was 4%. They were forecasting a pause of 4%, and the actual number is of 4%. So they did not decrease in the UK, this affects the pound, just like it does when we're in our local in Canada. If they decrease or increase interest rates, it affects the Canadian dollar. It affects lending rates. Also in the US, when we have our FOMC with Mr. Powell, when they increase, decrease, or pause rates, that affects the US dollar as well. Okay, so every nation has their own interest rates, has their official bank rates, has their overnight lending rates, and you just got to follow, again, when you're specifically trading in this time, and if you're trading anything to do with the pound, okay? And then 30 minutes later, just like here, where we have Powell speaking and the Bank of, here in Canada, we have the Bank of England Governor Bailey speaks 30 minutes later, and that's where they talk about the guidance, also why they pause the rate, and then take questions from the audience, okay? So that's already happened. That's gone by. Now, what are we going through over here just 30 minutes ago? We have right now the Bank of Canada Governor McLean speaking right now. Natural gas storage was released, and you can see we have throughout our session, 11, noon, we have a lot of FOMC members speaking as well today. We'll see their remarks over here on Financial Juice to the left of my chart. We got member Barr, Williams, Hammock speaking, and then later on when the markets close, you can see into Power Hour. We also have Waller speaking. There is a little bit more impact because it goes into the close of the day, 4 p.m. And after hours, we also have other FOMC speakers, Polson and Musalem speaking. So these are all the other speakers with FOMC. It's not just Powell. Powell is the head chairman. He's the one that gets all the big spotlight, but there's other members as well, okay? And after hours earnings are right after that. Then you can go into trading your Tokyo session. Next week, we're going to have, starting Monday, Tuesday next week, we're going to have a live New York and a bonus future session, Asian session for Monday, Tuesday next week, and then we're going to finish off the week with some Tokyo sessions. So stay tuned for next week's schedule. Make sure you're subscribed to the channel and you hit notifications so that you can be part of those live sessions with us, okay? Earnings. We had some earnings in the pre-market. Celsius, D-Wave, ConocoPhillips, Datadog, Vistra, BCE, Oscar Health, Moderna. Remember back in the COVID days? This was a fun little security that we were trading back in 2020. And you can see it's not in the news anymore. That time has gone, but you got to be on top of your game. Anytime there's another pandemic that it comes up, we got to be on top of it. Who is creating these vaccines? Who's creating these masks? Who is creating all of these things? Let's be the first ones in, position ourselves, and hopefully we can make some money, because this was a fun little run-up that we had in 2020 with Johnson & Johnson, Pfizer, Moderna. ADHP was the Chinese manufacturer of all of those masks. Prior to COVID, it was trading at 20 cents, and during COVID, it went up to $44 a share. A lot of snipers made a lot of coin during that time. So we're going to get into this, have some fun times, okay? But you got to do your research. You got to do your due diligence, okay? So that's how markets work. There's many, many publicly traded companies that offer products for any specific needs. Those are pharmaceuticals, okay? There's all type of products around here, okay? You just got to stay on top of your game. And today in the after hours, who do we have reporting? You guys know that we've had big tech report the last few weeks. So now it's kind of dying off tech. And now we have other corporations reporting. We have Trade Desk today at 4 p.m. We have Iris Energy. This was a big one. They made a big merger. They were up 25% last week on a merger with those top tech firms. So this one is reporting. So add this to your watch list if you guys like. You're going to hear about it for the next few weeks. IREN is the ticker. You can see that their earnings are really low, 14 cents per share, revenue, 236 million. But I guarantee you with the merger that they just did, next earnings report, this is going to be maybe 2x or 3x this money, this revenue. So this is, when you start your research. So this is when you add this to your watch list and you watch it. They made a massive merge with a big tech company. So that's maybe what you want to watch going forward. That's how you start. Everyone asks me, Ron, how do you start? How do you know what to put on your watch list? How do you know what to watch? I'm telling you right there. That's what I do. This one just signed a big agreement, and they were up 25% in one day. So maybe that will trickle over in the next quarter and the in the years to come, okay? SoundHound, Open Door, DraftKings. Some of you guys use DraftKings for your sports betting needs. They are a publicly traded company as well. This was fun too. Remember, guys, in COVID, when Las Vegas was closed, a lot of these online gambling sites took off. There was DraftKings, FanDuel, all of these things. Like, you know, when you're betting on sports or anything, when Las Vegas is closed, these apps took off, and they took off hundreds of percent. So you got to be on top of your game. You got to know what's going on around the world. Okay. That's earnings. Nothing to be real concerned about. That's going to really move the S&P 500 or NASDAQ or Dow. And then let's go into just today's news. Job fair. Okay, so lots of job cuts. Job cuts in October hit the highest level in over 20 years. Yes, I'm reading this correct. Job cuts in October hit highest level in over 20 years. Is this a surprise for everyone? I'm not surprised. AI is taking over human jobs. There's a lot of cuts. A lot of jobs leaving countries due to tariffs and everything. So last month was the worst October for layoff announcements since 2003 as companies slash roles to save money. So guys, unfortunately, some of us here on this call are going to lose our day jobs. Some of us are going to lose or know a friend or a neighbor or a family member that loses their job. So that's why, guys, trading is... You can do this. You can do this while you're working, and you can do this while you're not working. All you have to do is learn, study, and use proper risk management when you're trading. And I hope all of us can achieve success in trading. But it's not an overnight process. It's like going to school again. Just like if you were to enroll in college. A college degree or a university degree is minimum 4 years. You don't just go in overnight and pay all that tuition and walk out with a degree and get a job. Okay, I know a lot of my son's friends and my nieces and nephews. They've all graduated university with honors, and they're still unemployed after 2 years. They can't find work. So it's not always guaranteed that even if you go to university or college, you're going to be guaranteed to land a good job. So that's what trading is too. You're basically going back to school. You're learning. It might take you multiple years to learn. It costs money. Tuition costs, a paid lesson. If you lose a trade, that's the paid lesson. And even know that you study for 2, 3, 4 years, you're not guaranteed to make money in the financial markets just like that. You got to work hard at this. It's not easy, okay, guys? So that's why you got to continue to study as much as you can on a daily basis and correct your mistakes. Stocks waver with the job data. Tesla in focus today. Tesla's down almost 4% right now. Texas gas giant says it's sitting on a holy grail for AI power needs. This company right here, CRK, is up 5% right now, has something to do with Texas gas. So I'm sure that this is an oil and energy security. So this is how you can figure out what's moving, what's green, what's red right now, and see how the markets are moving. Again, Elon Musk is always in the news. Sparks fly as Tesla's $1 trillion day for Musk arrives. Disney signs DraftKings as ESPN's new sports betting partner. Okay, so there you go. Disney is now signing DraftKings. DraftKings is up 1.5% and Disney is down. Normally when the company Disney is acquiring or another company, the company it's acquiring is traditionally in the green and Disney is in the red as an acquiring company. Not always, but that's historically how it is. Just moving back down here. Bessent leaves Supreme Court hearing on Trump tariffs optimistic. So Trump's tariffs are in the Supreme Court right now, getting a ruling. We're going to see if this sticks, if tariffs stick, or the Supreme Court rules against it and takes tariffs across the board off. And that will substantially stimulate the markets if tariffs are taken off. You guys look back test back in April, how the markets moved when tariffs were announced, and then when they kind of got delayed, how the market reacted. Maybe we'll see the same pattern develop over right now. Okay, so that's in the news. You should be following it. Amazon's $300 billion rally puts stock back in AI conversation. Earnings live. Moderna pops. Snapchat soars. Duolingo plunges. Look at Duolingo. Negative 30%. What the hell is going on with Duolingo? Why are they down 30% right now? Like, this is an online learning platform for children. Like, my daughter was using this. She was learning a little bit of Italian. There's no Albanian on it to learn, so she was learning Italian. But negative 30%. Imagine you were following Duolingo into the earnings and you suspected something that it was not going to be a good earnings and you took a put going into earnings. You would be just making money rain in your house right now. If the security is down 30%, those puts, the premium is probably down 300%, 500%. Like, it's unbelievable the moves we're getting in these markets lately. Nvidia backed startup strikes 1.17 billion over here. So there's a lot going on. Gold rises as weak US data bolsters prospects for a rate cut. So this is how you can see correlations with gold. When there's a weak US job report, maybe there's weak US dollar, and that will stimulate gold. Okay, more injection of liquidity and investor money going into gold. Okay, so we're gonna get to gold, but that could be driving it. So gold is pretty steady today. It's only up $4 an ounce, which is basically nothing. It's 0.1%. The markets are down. You can see S&P 500 is almost down negative 1%. You got Dow is down negative 0.73%. NASDAQ Tech is leading the way, down negative 1.5%. Okay, and Russell, the mid caps are down negative 1.4% right now. Okay, so markets are pretty red right now. Let's just continue going into Discord, guys. We sent out a few signals yesterday along on NASDAQ, along on NASDAQ right over here that was running 185 pips, and also some commodities over here. There was a sell on US oil that finally started to break down below $60.32, running for 120 pips right now. So we'll keep an eye, guys. If you need trade ideas or trade signals, we provide those here. There's different plans if you just want the signals alone, or you want the entire membership plan where you get all the live sessions, signals, the Discord, and all of the education and everything we offer here at SST. And guys, there's a free Telegram pinned at the top of YouTube for you guys. So if you go to YouTube, scroll to the top, there's this free Telegram channel. Has everything that we do in here before and after of the trade signals, all promotions and giveaways. Guys, tomorrow is the last day to enroll in our starting Saturday and Sunday. We're going to have a 2-day crash course / boot camp on risk management with myself. It's not scheduled time. Well, we're starting at 11 a.m. each day. I know this time says noon, but we were asked to start a little earlier because it is the weekend. So we're going to start at 11, possibly go to 3-4 hours each day, maybe longer if we need to. So it's not just like PowerPoint and just theory. We're going to go into TradingView. We're going to talk about risk management, and I'll be there to answer all of your questions if you guys need. So if you would need a little bit more help on your risk management, you're welcome to join. You also sign up for a 1-month program with us, and you get this boot camp included as a token of appreciation to you guys. And all lifetimers at SST, you guys are enrolled in this automatically. You guys will get the Zoom link provided in the VIP Discord channel. Okay, and guys, let's get into this. If anything you need from our website, here is the pop-up right here that can take you, direct you to signing up for that risk management bootcamp. And again, you got to start today or tomorrow to enroll because we're starting this Saturday morning. Okay, and if you miss it to everybody else, it will be recorded and uploaded to the website, so you can watch it at a later time if you can't make it live. Okay, and guys, here's all of our education with myself and Dave. Lots of tutorials, lots of courses, a lot of boot camps, and all types of webinars, over 120 webinars that are 2 to 3 hours long. You got the super systems of trading and more of an advanced level of trading, and everything that we do here education wise. So it's not just live trading, there is lots of education. You can self-teach yourself here. It's like I said, you're going back to school and you can go at your own pace. Some of you guys are taking your time going through all of this, and you're learning, and it's helping and it's improving. So and then we go in live sessions. Any questions you have, pertaining to anything, we can do our best to answer. And free blogs available for everybody right over here. I just want to go over this blog real quickly because I haven't had a chance to go over this. It's really important. Lessons learned in the markets. Losses in trading offer valuable lessons. Trading in financial markets involve a degree of risk. We all know this, okay? Some of you guys go high risk. Other traders go a little lower risk. Some traders use moderate risk. Everyone has their own risk appetite, okay? So you need to figure out what is your risk appetite and trade accordingly. I would suggest that all of us don't use high risk leverage unless you know how and you have the experience to trade like that, and you know how to emotionally handle when you go into drawdown if you're doing high risk trades. It's not about panicking, it's not about getting pissed off, it's not about getting frustrated, it's not about revenge trading. You have to know how to handle your profitable trades as you do your losing trades. You have to remain focused. But sometimes when we're trading with too much risk and we go in big drawdown, then just emotions just take over. It's just nature of a human, okay? But you can control your risk prior to taking the trade. That's one of the hardest things to learn in risk management, okay? And taking losses is it's part of the process. It's part of the game. Doesn't matter your experience level. There's professional Wall Street traders that lose on a daily basis, okay? And they can't even get the returns to their clients. They suffer too. So it's not easy. Even the most successful traders experience losses. The key to long-term success in how one manages those losses. Here's why it's normal for traders to take losses and how to proper risk management and capital protection. So let's just talk about this. Accepting losses is part of the game. Okay, whether you like this or not, it's part of the game. I take losses, you take losses. It's natural, okay? Just some of us know how to handle losses a little bit better than others. That's the only difference. So you have to know inherent market uncertainty. Markets are influenced by countless factors, including economic data, today's job numbers that came out, tomorrow's NFP that might come out, geopolitical events, if we have war across the world, if there's pandemics, things like that during COVID era, and investor sentiment, all of which can shift unexpectedly, okay? No trader, regardless of their skill or experience level, can predict these movements with complete accuracy. It's impossible, okay? Trading is a game of probability. You want to look for high probable setups, okay? Trading is essentially a game of probabilities. Even a strategy with a high win rate will have losing trades. For example, if a trader has a strategy that wins 70% of the time, they will still encounter losses in the remaining 30%. But if you go high leverage, those 30% losses, you still might have a 70% win rate, but if you're looking for negative risk to rewards, that 30% will take away from that 70 and you're still a losing trader at the end of the day with 70% win rate. So you have to also know what sizing you're using when you're trading, what contracts, what lot sizing that you're placing on your trades. Behavioral finance. Human emotions such as fear and greed can lead to mistakes or impulsive decisions. Okay, I yesterday in yesterday's 1 minute scalp session, I took an impulsive trade on a 1 minute and it turned back and it hit my stop loss. Okay, and I learned from it. It was an impulse trade. I didn't wait for that bar to close and it came back and it hit my stop loss. Okay, so we can take losses by just simply taking impulsive trades without waiting for bodies to close. So that's one of the reasons why we take losses as traders. Resulting in losses, recognizing this helps traders accept that errors are part of the learning curve. Risk management, capital protection. Remember what I said. You're not just a trader in the markets. You're also a risk manager and you're also an account manager, and you got to protect your capital. When you lose your capital, you have nothing else to trade. That's it. So these are the most important factors of trading, is managing your risk while you're in a trade and also how to manage your profit as well. So number one, position sizing. By limiting the amount of capital invested in any single trade, traders can protect their accounts from significant drawdowns. For instance, risking only 1 to 2% of your total capital on each trade prevents a few bad trades from wiping out an account. I have not wiped out an account in over 15 years. So why? Not because I'm getting lucky. It's because I'm just trading with 0.5%, 1% per day. I'm not trading with my entire account and going all in on a trade and risking 50% of my account on one single trade. So you got to learn how to lower your risk, guys. I know it's different with when traders are trading with live money, their own money, than it is with prop firms, okay? But you still got to learn proper risk management when you're trading with a prop firm as well. Otherwise, you're just going to keep failing prop firms and keep buying them and keep losing money. So it doesn't matter if you're trading with a prop firm or you're trading with your own money. You still have to learn proper risk management, okay? So at some point, you're going to have to learn, whether it's today, tomorrow, next week, or 10 years from now. You're going to come back and you're going to say, Ron, you were right. Risk management is one of the most important things in trading. I understand it. I went through this cycle myself for multiple years. Stop loss orders. Implementing stop loss orders helps traders limit potential losses by automatically closing a position when it reaches a predetermined price. This discipline is crucial to protect capital from large adverse moves. I know it's crazy that I'm mentioning this, but there is some traders that take a trade and they don't even place a stop loss. Nothing. And they walk away from the computer and they go to sleep. And with an open trade with no protection. It's wild that some traders are still doing this till this day, but it happens, okay? I've had a lot of conversations with everyone in this group, and that was one of the main things I could not believe, that traders till this day are still trading with absolutely no stop loss in the markets. It's a difference between if you use a mental stop than a hard stop. I use mental stops too from time to time in the markets myself, but I'm glued to the computer. I'm scalping the candles. So I know when to manually remove myself and say that's enough, I'm out, okay? I can watch support levels and you can have a hard stop or you can have a mental stop, but I don't walk away from the computer and go to sleep and leave it open. I'm watching right there. So there is a difference between mental stop and just walking away with no stop, okay? So these are the things that we're going to talk about in that risk management bootcamp, okay? We're going to go a little bit further into detail with these things. Diversification, okay? This is a big word. I know it's a fancy word, diversification. It simply means allocating your capital to other areas of the markets. So you don't want to go all in on tech, because if tech is selling off, then you're going to lose your entire account. So you want to diversify, spread your capital around, have a little bit of your money in finance, have a little bit of your money in oil and energy, have a little bit of your money in tech, have a little bit of your money in pharmaceuticals, have a little bit of your money in different sectors around the markets. The reason being is if tech is down, I'm sure that finance or oil and energy are up. So it can kind of balance your losses and things like that, okay? And that's diversification. So spreading investments across various assets or trading strategies can reduce overall risk in the markets. Diversification ensures that a loss in one area doesn't disproportionately affect the entire portfolio, okay? This is more investing, okay? Not so much just day trading or scalping the markets, okay? And then your R to R, risk to reward ratio. I know a lot of traders are very concerned about this R to R. Every single trade has to be a 1 to 3 or 1 to 5 on their money. And sometimes it goes up, you're looking for a 1 to 5, and it goes up 1 to 3, but you're still looking for that 1 to 5, and you don't know what to do, and then it comes back down, hits your break even or your stop loss. So this R to R ratio, this is up for debate, it's up for conversation. I necessarily don't always go with a R to R ratio. I go with structure in the market. If I'm placing my stop loss, it's below either some sort of structure in the market, and I could be targeting another structural area in the market. So I'm not this cookie cutter approach trader that has to use a 1 to 2, 1 to 3, 1 to 5 on my money, okay? I used to do that in the past, and I've done it, and I find that it's hard to stay consistent with this, okay? I was getting in a lot of profitable trades, but I wasn't doing anything because I was looking for that complete reward, and then it would come back and bite me in the ass. So I figured out a way how to fix that, okay? Traders should aim for a favorable risk to reward, okay? Favorable. It doesn't have to be a 1 to 3 or 1 to 5. It can be a 1 to 1. You know, if you're risking $1 to make $1 and you're consistent at it, you're still building your account. But I don't believe in like negative risk to reward. I don't want to bet $1 to make 50 cents. You know, like it has to be at least $1 to 1, or more, $1 to $2, $1 to $3, $1 to $5, things like that. Okay. And then learning from your losses. Please, guys, okay, this is very important. These are lessons in the market. They're teaching you something. A lot of you guys take a loss and you don't even review it, you don't even think about it, and then you're within 1 minute you're in the next trade and you haven't reviewed nothing. I'm telling you that that's not the way to do this, okay? So you have to take a little bit of time and review your losses and learn from them, okay? I look at them as paid lessons. So if I take a trade today and I lose $100 and I get stopped out and I lose $100, I look at it, yes, I lost $100 out of my pocket. It's gone. It's not there anymore. But I also have to look at it as I just gave the market $100. So I got to learn something from it. It's like paying for a tuition. It's like paying for a course. So that $100 is gone. I paid the market $100. Now I better learn. I better take something from it. What did I do wrong? Yesterday's loss was I went in on an impulse 1 minute candle and I learned my lesson that maybe I should next time wait for a body to close. If I waited for that body to close, I would not have taken that buy and then I would not have lost my $100. So that's how you can go back and review and learn as a lesson, okay? And so do some post-trade analysis. After experiencing a loss, traders should analyze what went wrong. Was it due to poor market analysis, emotional decision making, or an unexpected news event? Understanding the cause can prevent similar mistakes in the future. I also got in a trade yesterday right prior to Trump speaking, and when Trump started speaking, the trade went against me in the opposite direction as well. So it's understanding too, when you're trading, what is there an event? Is there a speaker? Is it Powell? Is it Trump? Is it Elon Musk? Who is talking in the markets? Anything can change the momentum just like that fast, okay? And that's a lesson. Then you shouldn't be trading or taking live trades right prior to one of these speakers because it could go against you in an opposite direction, okay? Adjusting strategies. If patterns of losses emerge, it might be necessary to adjust or overhaul the overall trading strategy you're using. For example, if losing trades consistently occur during certain market conditions, a trader might decide to avoid trading during those times. Let's say you're a London trader and you're having a lot of success in London, then I would continue trading London. And let's say you're a trader and you're having a lot of difficulty in London, you're taking a lot of losses, but then you move over to New York and you're doing really good in New York. Then right there, the market is telling you something. Your lesson is maybe try to avoid London or just continue to go and figure out what's going on in London. Take your time with London, maybe open up a demo account and continue trading London, but figuring it out while you can continue trading New York where you're doing really well. So I would shift focus more on New York and continue to learn more about London. The market is telling you something, okay? I wouldn't just continue trading London and get frustrated and revenge trading if you see a pattern of continuing to take losses and you're struggling in London. It might be now time to learn what's going on or shift to a different session. Emotional control. Losses provide valuable insights into a trader's psychological resilience. Overcoming the emotional impact a loss is crucial for maintaining confidence and focus on future trades. So this is important, guys. You need to learn how to control your emotions in trading. If you lower your risk, I'm sure that you can control your emotions. You won't panic because you're actually watching what's going on and not just looking at your profit and loss report, okay? And continuous education. I'm a student to the game myself. I'm not going to stop learning myself. I'm learning every single day myself. I've been in the markets for 25 years now. 25. I started at a very young age. Started like even more than 25 years. I started 16, but I'm going with 18. I'm 43 now. So that's 25 years. And I'm still to this day learning something yesterday, today, and tomorrow. Why? Because I choose to. I can be one of those traders that says, I know everything and that's it, and I'm done. No, I'm a student to the game. I will always be a student to the game. There's always something you're going to learn every single day, no matter what experience level you're at. These markets are above us and they can throw all types of shit at us. So you got to constantly learn, guys. Keep your ego in check. Okay, it's not about ego here when you're a trader. This is about constantly learning and improving on yourself. Okay, so each loss is an opportunity to learn about markets and refine one's approach. Successful traders often engage in ongoing education, whether through reading, courses, mentoring, blogs, whatever it is, YouTube channels, all of that shit, okay? Make sure you're continuing to learn. Examples of learning from losses. Famous traders. Let's look at some famous traders. Consider George Soros. Some of you guys know George Soros. Some of you guys don't know George Soros. But this guy took $1 billion on the pound. If you guys remember back in the day, $1 billion in one day. he took a trade on the pound, who famously shorted the British pound and made a huge profit, $1 billion on a short on the pound. But he also had periods of losses. His ability to cut losses quickly and reassess his strategies is a testament to effective risk management and learning. If you guys know all about George Soros, whether you like him or you hate him, I don't give a shit about that. But he is a trader, and he took the pound for $1 billion. He shorted it, but there was previous losses that he took before that big trade. So, you know, he learned from it. I'm sure he did. Retail trader scenarios. A retail trader, myself, I'm a retail trader, might lose money on a tech stock due to overexposure and not using a stop loss. So let's say, for example, I bought NVIDIA at the highest point and I was trading it without a stop loss, and then it started to sell off. By diversifying into other sectors and setting stop losses in future trades, the trader learns to mitigate such risks. So if in that scenario, if I did that, I got to learn from that. Maybe it's not best idea to buy something at the highest point and just FOMO trade, fear of missing out, because it could go higher. And then if it does correct itself, it's not a crash, it's correcting itself. But if you're high leverage and you're trading without a stop loss, you might blow your account or lose a lot. And you got to learn from that. That's not appropriate way of trading. And then finally, in summary, while no trader is perfect, including myself, embracing losses as learning opportunities, coupled with robust risk management and capital protection strategies, can pave the way to recover from setbacks and achieve long-term success. So you might take a trade and you lose, but you can, if with proper risk management, you can make it back up and you can continue going in your journey as a trader. But if you take a massive loss and you blow up an account, it's so hard, not just financially to come back from that, okay? You do have to have the money to come back, but also your mindset is completely ruined, because now all you're thinking about is, in the back of your head is, I just lost all of that money. How am I going to recover it? Your next trade, when you take your next trade, I guarantee you the back of your mind is that last trade you took. So you got to overcome that as well. But if I take a trade right now and I get stopped out and it's a little trade, it's maybe if I'm trading, for example, with 1% today and I only lose my first trade is 0.2, that's it. I still have 0.8% to go for the day to make that back. And even if I lose 5 trades in a row at 0.2, I've lost 1%. That's still a really shitty day in the markets. I've lost 5 trades, but altogether, it's only 1% of my entire capital. I can still maybe possibly recover the next day or the next week and go right back into a winning, successful percentage, okay? So if you focus on your loss, you will continue to suffer. Okay. If you focus on the lesson, you will continue to grow as a person and as a trader. Okay. So losses in trading offer valuable lessons. Some traders really respect this. Other traders don't. Who are you? What do you do when you lose a trade? Do you go back and review it, or do you just forget about it and keep trading? That's up to you guys. I'm telling you, like, this is kind of the blueprint to success in long-term trading. Someone might say, Ron, this is all bullshit. Who gives a shit about this? It's not really important. That's fine. But if you want to be in the game in trading for more than 1 week, 1 year, 5 years, 10 years, 25 years, and maybe possibly make this your supplemental income for yourself, I'm sure that you're going to have to respect and learn risk management at some point. Okay. And then, guys, let's get started. If you guys wouldn't mind hitting the like button on YouTube and subscribe to the channel, if you guys get good value from us, we do appreciate it. Okay. Now let's get started. We're going to go into the charts here. We're going to get started with gold. Okay. So some of you guys might be trading gold already. Some of you guys might be in a trade right now. I'm going to start to do a top-down analysis. I'm going to go a little faster. So I'm going to bring it down from the daily, 4-hour, hourly, right back down to these 5 minutes. But we're going to have structural levels above us. We're going to have red blocks. We're going to find supply zones. We're going to find demand zones. We're going to have some points of interest on all those time frames, and then we're going to come back down here. Okay, so good morning, good afternoon to everybody. Thanks for joining. Dale, welcome. Reese, good morning. Justin, Camille, 5595, welcome. Sang, Sergio, welcome. Thanks guys for joining. Oh, awesome. Justin, UFP Technologies, ticker UFPT, has been buying medical supply companies all over the world. They're going in heavy. There you go. Justin, add that to your watch list and watch it and see how it goes. So that's great. That's how you got to figure out stuff, you know. And that's how you can learn how to invest in companies and grow with those companies as they continue to do that. So doing some research when no one is looking behind the scenes is where you can potentially make a lot of the money, okay? Frank, Christoph, Sarah, welcome, guys. And everyone on YouTube as well, thank you guys for joining. Welcome. Srikanth, welcome. Tony Gold, thank you for joining. Habibi, Donald, welcome. Just Mustafa, thank you for joining. You're just Mustafa? That's fine. Not Mustafa, but you're just Mustafa. I love it. I love it. I'm just Ronnie. Okay. Welcome, Felicity. Welcome, Jonathan. Thank you guys all for joining. Appreciate you guys. Okay. Alexander, welcome. Thank you. Welcome, guys. Let's get into this now. Okay. So I'm going to start off gold on the daily. Okay. So if you guys all want to follow with me, you're welcome. We also have some financial news on the left side over here. So just going through this just last few hours. Let's see what we got going on here. So at 9 a.m., just before Wall Street, the U.S. announces changes in the reciprocal tariff rates with China after their agreement. Nancy Pelosi announces her retirement from U.S. Congress. Finally, how old is Nancy Pelosi? I think she's like 100 years old. Anyone know how old she is? I honestly think she's 100. Nancy Pelosi. She's taking these markets for millions and billions of dollars. How old is she? Where does it say the age? Christoph, she's 125? Let's see. Nancy Pelosi's age. Sorry, guys, but we got to figure this out. 85. Okay. She was born in 1940. I thought she was 100. But she's made a lot of money in the stock markets, okay? So, you know, she makes laws and regulations, and she's already invested prior to dropping. If you remember all the climate and all the clean energy and all of the electrical EV mandates, it was her and her husband, and they cleaned out the markets, okay? So it happens, guys. So the markets are corrupt. What can we do? But learn from her. Learn from her. Learn what she does, and you can do the same shit. Exactly. Look at Donald Trump and his family. They've made $800 million so far on crypto. Let me say that again. Donald Trump's family, his sons, his family, have made $800 million in the last, I don't know, when did he start? In April? Till this day, 800 million. Okay? So almost 1 billion in crypto alone. Maybe they know something that we don't know. I don't know. Follow their lead. Okay, so what we got to do is we got to follow XAUUSD on the daily. Wow. Okay, so you guys remember this big run up. Hopefully you guys do. I'm not going to explain everything that happened over here. You guys know that coiled run up. Now let's go top down, right? Quickly. There's our all-time high. 4,380. In the futures, it might be 4,400, okay? Regardless, you'll see 3 daily candles that came up there and pushed down. So I use orange for Donald Trump's makeup on his face. That's Donald Trump's face up there. And what I do is I connect now the dots. So I go from the all-time high to those 2 bodies right there. I make a red zone to show me that this is where the sellers are. And there it is. There's a supply block in the market at the all-time high. And then the only other thing I do is I stretch it into the future, just in case it ever does come back up here. That could be the second top and then dropping back down, okay? So I want to be ready if it does come in there, okay? That's how I acknowledge it. Continuing to move down. We had this big bearish bar, Tuesday, October 21, closed below there, okay? First thing I do when I see an abnormally large bar is I want to locate exactly 50% of it and the point of control. So right here, this is where I start to look for point of interest at 50%, right there, 0.5. I make it a yellow line. All yellow lines reflect daily points of interest on my chart. And then the next thing what I do is I find that point of control. So using the Fibonacci tool, it's the one line above, one line below the 0.5. It might be the 618 or 382, depending if you have it reversed, okay? Regardless, that's the zone and it's bearish. So that's what I like to locate, and I stretch that into the future as well. So now I look, have we transacted into this zone? We have not. The highest we came up to was right here on Wednesday, October 22. So that was the most recent lower high that the buyers pushed it up, 4,160. And since then, that is resistance. You can see it's resistance. And then we had some consolidation here, a nice little flag, bear flag in the market below there. And then we had this big day starting last Monday, bearish ignited and dropping all the way down. So that's another big body candle that pushed down where sellers were in control. So that same candle, let's do the same thing. Let's go from the opening price, closing price. Let's figure out 50% right there, 0.5. And let's figure out the point of control of that candle as well. So same thing what I did with that one above. I'm doing the same shit with this one right there, stretching it into the future. Now I can see it came up, back down. It came into it, back down. Big bullish day, Thursday, October 30th. Right in there. And look at Friday, it transacted right in there. And then they brought it right back down. And this is the start of this week. Monday, Tuesday, big bearish day. Look at yesterday. Strong bullish candle coming right back up. And today was also bullish, bullish, bullish. Coming in right in there again. And they've rejected it back down. So you can see this red zone is still holding. Guys, I talk fast. So please, pay attention. Because I'm going to talk fast. Okay, so some of you guys that know what you're doing, you can follow along with me. But I don't have time to sit and explain everything. That's why join our program if you want, and it's detailed what I'm doing. And then I'll do some more. I'll do some more Wednesday webinars with us. And then if you guys have questions, and then I will go over this stuff more in detail. But right now the markets are live, and we want to look for some trades. So we got to continue to move. So you guys can see top down, all-time high. There's a bearish block in the market there, bearish block market in there. We haven't transacted in this upper half. We haven't transacted at this yellow line. We haven't transacted here, nor the all-time high supply. So sellers are still, technically in control. However, we're starting to see a bottom develop here. Right there, point of interest. Is that not a body, and a body holding at 3,925? And look at this yellow line relative to the left of the chart. Look at it cuts this big bullish candle basically in half as well. Okay, so you can see this body that closed above all the way back on October 6th that started that move to the run to the all-time high came all the way right back down. It bounced right there. It came up there. Look at it. And then back down. Second bottom right here. We were coming up strong today. Looked like it wanted to trade in there and break out. It looked like a double bottom on a daily where it came down one bottom. There's the neckline. It came back down. Here's the second bottom that was developing yesterday. And today we had a strong bullish daily candle ready to break out of there. You guys recognize this pattern. It's like a 5-minute double bottom. Technically it wants to break out and go higher. But look at when it came right up there today to today's high, they started to move it back down. So if we come back down, we might come back down, revisit this, and then we break and we go down bearish. If we follow this path, maybe going into NFP tomorrow and next week, then if we break this, where are we going down? We're obviously going to fill that wick right there, that most recent low to 3,880. Just fill that wick. And then look at where that wick is located. It's located at that bullish opening balance. And it used to be resistance in the past before we had that. Then continue to break down. You got a little bit of a bull flag where could be some demand right in there. Where that was a bull flag at one point to break us out. If you stretch that zone into the future, that could be where it's green now. That zone could be developing with pending buyers waiting to get in there. If that zone can't hold, then obviously it's going to break down and it's going to come down and shoot down right into 50% right there. How do I know this? It's just because I follow candlesticks every single day and I know what these things do from time to time, okay? So that's how I have it built down there, if it does come down there. Now let's just follow yesterday's volume going into today. Okay, look at, we were talking about this on yesterday's Zoom, how it opened right here after that big bearish day, how this was a $70 candle, $70 ounce of gold, 700 pips, and it only had $3 move to break that low. When this opened, it didn't break yesterday. I said that was a clue that the buyers are strong and they're going to come up. So let's follow it. So it came all the way up. That was the most recent high yesterday. Okay, so that's it came up, and then look at where it closed. So there's my closing price yesterday, point of interest, and look at today's opening price. So we opened today. We're right back down to the opening balance. Today was really bullish. It opened bullish. It took out yesterday's high. Okay, so it took it out. It came back up bullish. It took out, like it was engulfing, like these two bars were engulfing. That's a pattern, 2-bar pattern in trading, where it was coming all the way up, and engulfing this. And we came up. So I see a body close, body open, and kind of this wick right there. So there's got to be some sort of point of interest right around there. And look at it, it's right around 4,000, right around that psychological number. We came up and it broke it. And it broke. Look at the high of today. Okay, so now we have a high already. They pinned it down. So there's my purple line for the high of the day, around 4,020. Look, it got up to there. But technically, did it come in the red zone? No. Did it come up to 50% of the red zone? No. Did it come up to the top of the red zone? No. So this is technically a lower high from this wick on November 3rd. It's a lower high from this wick on October 31st. And we are still below the bear's point of control. So sellers are still in control. Buyers were strong today, but they were buying into a lot of offers, and those offers accumulated and overturned that big bullish blue candle. They rejected it back down. Right there, we should have found support at 4,000 at this yellow line. No support there. Then it came down right there. We should have found support at yesterday's high, was resistance. Why was it not support today at 3,990? There was no support there. So then the sellers continued to push it all the way down to the opening balance. Was there support there? Doesn't look like it. Why? Because I can tell that the candle broke and it was bearish. This was a big black shooting star coming down, and that's my lowest point of the day right there. That's my purple low, 3,963. And then the buyers stepped in right here, and they're pushing it right back up to the opening balance. So we're virtually right back to our opening price, and we've been trading since 6 p.m. and it's noon now. So that's been about almost around the clock, almost 20 hours. Then we're right back here. So if the sellers continue to push it down, we'll fill our wick. And then if it breaks, we're going to break down. And where are we coming down to? Are we coming down to, these opening kind of these balances right here? But what about here? From this purple to this yellow line, I could traditionally cut that in half. But what I want to do is I want to find yesterday's day a point of control, and yesterday's 50% of that volume. How do we do that? Same thing we did with the bearish candles, but we're going to do it now opposite direction. A bullish candle opens from the bottom and closes at the top. There it is. Okay, so I can do it now on yesterday's bullish candle because it's officially closed and confirmed. We know the opening, we know the low, we know the high, and we know the close. There's 50% right there. So I'm going to draw another yellow point of interest. This yellow line is representing 50% of yesterday's volume. You see today's low, it didn't come down and transact in there. That would be around 3,955 exactly. I can also determine yesterday's bullish point of control right there, okay? And you can see it just missed it. Today's low is just right above that. So I'm going to stretch that forward into the future because that is a bullish block in the market, okay? And then when I'm all done that, I get rid of my Fibonacci, and you guys understand that we got this little block in the market right there. Bullish, okay? So what do you guys think? Look at the pattern, okay? So right now it's still consolidating in here. That was a nice big push up. Looked like it wanted to break, but those sellers were there today pushing it right back down. So we're right back down to the opening balance now, okay? So we might get some choppy trading in this time of the day right now. This is where the buyers and sellers might be fighting again to see who gains control of the candle. It's basically open for anybody to take. The buyers can step back in, and if they do, then we got to come back up to test this yellow line. So I do the math. 39.80 to 39.90, $10 move, 100 pips. Okay, that could be a daily goal for somebody from this yellow line to that yellow line. If it goes from this yellow line to the next yellow line, 39.90 to 4,000, 4,003, $10 to $13 move, that's 100 to 130 pip to up to this yellow line. Then if we continue to go up to fill the wick to the highest point, 4,003 to 4,020, $17 move, 170 pips. Okay, but each one of these might be a resistance point. Like that might be, if it comes back up there, it might be exactly equal with that. It might be kind of like a tweezer top high and they put it back down. New sellers could be offering right there. Someone will say, well, Ron, the wick went up there. How can that be like an equal high when it already went up? But now the volume is down here. So if it wants to come all the way back up here, it's got, more offers could be flooding the market and position themselves right there to hold it down. Okay, there could be offers right here, offers right there. Remember, it's a depth of market, right? Okay, so right now we got a little bit of bullish volume coming in. I'm done with the daily now. Now let's break it down to the 4 hour. Now we want to see, where did the majority of this volume come from? Was it coming from Europe, the Asian session? Was it New York? This is where the 4 hour candles came down. You can see Monday was bearish. We found the bottom Tuesday right here when the market opened, 6 p.m. We started coming up yesterday, going through, coming all the way up. We had a pullback Wednesday again. Market open, came down. That's what made the lowest point of the day. And we came back up. There's 10 to 2 a.m. Here's London. Here's Europe. 2 a.m. strong. Europe has strong gold volume. Come all the way up and close right there. We extended it from 6 a.m. That's where pre-New York, this 4 hour candle represents pre-New York, COMEX, news, everything, and going into Wall Street. And that made the highest point of the day, and they rejected it back down. Came down and closed right there. Did this 4 hour bearish bar engulf that European volume? No. But it kind of came down to approximately like almost engulfing 90% of it. And then look at the carryover candle. That's why you guys got to learn what are carryover candles or momentum. How this came all the way down bearish right there. If I was marking the 4 hour point of interest, I would draw a white line at the closing and look at it. Just briefly, look at the wick. You can barely see it. So it just kind of flashed blue for a second, and then the sellers came in. Why? Because the momentum is coming down from this candle. As soon as it flashed blue, that momentum is coming down. It's more than a 4 hour candle. This is coming down more from a 6 hour candle, an 8 hour candle, a daily candle. There's more momentum pushing down. And look at the size of the wick. The wick matters. This is not a huge long wick to fill, just a rather small wick. So it came down, it came down, it came down, it broke. Right there. There was no buyers to push this thing right back up, and then that sellers are coming down. So this is the 10 a.m. candle. This was the big bearish one. This is 10 a.m. now, after we had some news. This one's going to close now in 2 hours and 12 minutes. So it pushed down, pushed down, pushed down. It broke that daily point of interest right there, came down, and that's our lowest point on. And look at where it stopped down, guys. Okay? You're telling me these are not psychological numbers? I've been talking about these numbers for over 6 years now. So this is not by just I'm getting lucky. Look at the number, guys. Look at the bottom of that wick right there. 3,975 on the dot. Okay, so those are those. You got to understand how auctions work. They work in 25 points. Look at interest rates: 25 points, 50 points, 75 points, one whole point. Look at kind of pips: 25 pips, 50 pips, 75 pips, 100 pips. Points: $25, $50, $75, $100. It's an online auction. Okay, notice how a lot of these candles are gravitated towards these numbers. Okay, so overall, it came back up. They're pushing it back down. We still have this strong leg. See that big blue green box down in here? What if the 4 hour volume comes in here? That's where maybe we're going to and break the lowest point of the day. That's where those buyers could be. I told you on the daily, and that could bring it right back up. Okay. However, if it loses this, could come down all the way down to that 4 hour double bottom right there. Then it could go up. But as it's coming up, if it closes below there, that zone is red. It could break and then continue dropping down further. Okay. So that's how you can start to understand how it looks on the daily, how it looks on the 4 hour. Right now, the 4 hour is bearish. Okay. So it's bearish. So if we're bringing it down with the 4 hour, it's technically bearish right now. Okay, let's go into the 1 hour. The 1 hour is bearish. Okay, it was bullish. It was coming up right here. 2 a.m. There's London. 3 a.m. 4, 5 a.m. 6 a.m. They brought it back up. There's 7 a.m. Here's COMEX. 8 a.m. And then they really pushed it down. 9 a.m. Lower high, equal highs at the highest point of the day. You could look at it as a pattern where it came up, back down, came up, and there it is coming down. There was the break, close. Even the 1 hour candle, you can see how it continued to move. Look at it just flashed blue for a second. So you see how that yellow line is representing 50% of that hourly candle. If I was going to cut this hourly candle in half, see right there. So 4,003, it's a solid area. It's not only representing half of 9 a.m.'s candle, but it's also a daily point of interest. We opened almost bearish ignited, took out the wick, and we came down right now. So I can see right now on the hourly, right now, this candle closed. Can I determine now, can I do some analysis on the 1 hour? Absolutely I can. Can I go from the open close of this 1 hour? I can now because it's already closed. Can I figure out where 50% of this hourly candle is? It's right there. I'm going to use a white line to represent hourly now. Can I figure out the point of control of the last hour? Absolutely I can. Right there. So you see how we just traded right into it this hour? It was big blue candle, blue candle. Look at where it just traded right into. Right at 50%, sellers are there, pushing it right back down. It's already came down, but it has not broke that low. So let's just mark up that hourly low. Okay, so we're kind of right inside here. Okay, this is how gold is trading right now. So it could definitely, it's still coming up with an uptrend. Okay, if we look at it like this, coming up, went back down, higher low, went back up, higher high, couldn't break for a new higher highs to get above those. So sellers are still in charge from the higher time frames. Remember what we said, the 4 hour, the daily, but they're coming down right now, The buyers are trying on the hourly to hold and to bring it back up, but they failed right there. So sellers, if they continue to push this down, we might be coming back down to fill these prior wicks, and then we have to locate the lowest point of the day, and then this is where there could be big buyers stepping in the green zone there, okay? Around 3,955 down to 950. Okay, right now, let's just continue to go off of this hourly candle. It's closing in 8 minutes. So we can wait for this hourly candle to close in the next 8 minutes. We'll see where it closes. Right now, it's kind of like a bullish spin top candle. It opened. It was initially bearish, but didn't break that low. We got a higher low, came back to the opening balance, came all the way back up to 50% of this candle, got rejected, and now the sellers are pushing it right back down to virtually where we opened, where it's going to close in 7 minutes, okay? So I like to go into the 5 minutes for these sessions, so we can maybe look for something. Look at how the 5 minute candles, okay? So the 5 minute candles had a nice big run up, 2 a.m., that's pre-London. Was trading in here. We hit the highest point of the day. Now I can see at 6:50 and 7 a.m. There's the 7 a.m. drop hourly, and then it came right back up, lower high right there prior to 9 a.m. and then they dropped it back down. There's my favorite pattern to trade. It's kind of looks like a double top with the lower high shoulder right there. Why didn't it come up to the second top, highest point of the day? They want to drop it down. They're lowering the offers, and there it is. There's your bar that technically closed below. You had an ignited bar to continue trade, and then you also had a retest right there that continued to push down. So when trading is this, like, look guys, okay, there's your lower high shoulder right there, okay? Ask yourself, why did it not come in and retest the high of the day? Because those sellers there are pushing it down. They're protecting the highest point of the day. There's the body that confirmed closed below, so it's not an impulse. There it is. And then there's what I always talk about, the firecracker. You got to have balls to take this trade. You got to know what you're looking for. There it is, short wick, and it opened ignited bearish right there, like right away. You got to make up your mind. Get in a sell, place your stop loss either above 50% of this point of control, that's a tight stop loss, or go above that candle. That's how I trade structure. Remember I said I'm not a cookie cutter 1-2 RR trader like that, okay? Because if I was going to take that trade, let's just put it with the cookie cutter approach. If I was going to take the trade at the break of the wick, that's how it would position a 1-to-1. What I normally do if I take that trade at the bottom of the wick, I tell you guys, my stop loss might be just above that point of control, or it could be above the entire candle, okay? But that's, you're just still right above 50% of that candle, even if you just cut it in half. If you were just to cut it in half, and you could just be right above the halfway point, okay? I know I didn't take this trade. Someone's going to say, Ron, you're full of shit. You didn't take this trade. You're just looking at it. Okay, that's fine. But you'll probably see me take a very similar trade on today's call, and I won't be full of shit, okay? So what I do is tight stop loss, ignited top, break. As it's coming down, I'm not just guessing where it could go. I'm targeting something. So what I look at is below this yellow line. The last time the 5 minute candles were trading in there. You see right there on the 5 minutes, there's a body, right there. And a cut line is telling me in between this yellow line and yellow line, that's basically like cutting it in half. And you could either be targeting that 50% of that big bullish candle right there, or kind of right there to reduce risk and things like that, okay? So you can look to the left of the chart to see exactly what you want to trade into. And you see that? If I cut that candle in half, look at the big bearish bar. It came all the way down right to that red line. And then what I also do is I measure the move. So I'm not just guessing what I'm looking for. I measure it when I take it. If it comes down there, that to the red line is 70 pips. You guys know me. If it's going more than 40, 50 pips, my stop loss is at a break even, and I'm scaling out 80% down there and leaving a runner. And then you see, if you don't do anything, see that big bullish candle came all the way back up, tagged all the break evens, and then continued on the way down. How many times on these calls has that happened to me where I get in profit, I do something, and then I leave the break even, it tags my break even. It happened on a lot of these calls, and then it keeps running. So that's why I say, guys, when you look at a break even, maybe just keep a little bit of breathing room if you like, or don't go to a break even as fast as me. That's up to you guys. You guys will figure out your own strategy, your own plan, okay? But just looking at this now, it continued to push down. We found the bottom, came up. There was a little fake out, closed above there, but look at it, couldn't break that daily point of interest, the yellow line, okay? So I'm just getting rid of these lines, following this thing. So it came down, back up, new lower low, coming back up. Look again, it failed below there. It's kind of accumulating now. This is shitty volume, guys. I'm not looking to trade this shit, but what I can see is at this daily and this hourly line, you can see the 5-minute candles are still building and holding up here. So we've got a little bit of a 5-minute supporting zone. Green box there. You can see they're coming in, going back up. Coming in, going back up. Coming in, going back up. But we're failing to do something up here. So, you know, if you want to just see what we're doing on the 5 minutes, it's descending. We're coming down like an airplane, coming down, coming down, coming down. Okay, so this is our descending triangle. We're having a difficult time. So do we see a bearish candle close below here? No. I see an impulse. That wick did the damage, so it created that low, but no body has closed below. So maybe on this call we can continue to wait and see. Will gold close below there? If it does, we'll flip this green zone red. Maybe we'll catch a retest, and maybe we'll sell back down with the market to the lowest point of the day. But again, what I'm doing now, so guys, now I'm talking. This now is in live. Okay, so from this white line down to the purple line, again, was it going to follow this arrow exactly? Maybe. But look at how much space we have in here where we've never traded. Go to the left of the chart, right here. This is now where you got to do some analysis. There's the white line. There's the purple line. Do we see any structure on these 5-minute candles? Is there anything that we can kind of locate? I can see something. And right here, okay? You see that kind of basically cutting that big bullish candle in half. I can see already the pullback held, pivot, came back up. I can see right there was initially support. They broke it down. That's what created the low of the day. There was a little bit of volume trading below there, but you see how quickly it got right back up and came up. There was that big bearish candle again right below there. See how many times it got rejected at this red line. There's where it was support. There was where it was support. So there's something that's going to happen again around this level, 3,970. Okay, and then to further add confluence, if you don't believe me where I place that red line, do your Fibonacci from the purple line to the white line. This is when in doubt, when you don't know what to do. Look at how close I am to 0.5, 3,970. So I can now manipulate it myself. I was very close to looking at structure to the left. So I'll just go with my 50%. And what I'll do is I'll make also maybe a little bullish point of control zone in there if it does come in. Because that's where buyers could be coming in, protecting the lowest point of the day for not allowing it to break. And then if I'm a seller and it comes down in there, you know, if I coming in there, that's about 50 pips, red line 60, bottom is 70, 75, 80. Okay, and then again, same rules. If it breaks through there, closes below, we'll make that one red. Then we could be targeting the lower half of the lowest point of the day, then continue dropping down. But we got to move down in blocks, right? And these are where these blocks are hidden in the market. Or we could, you know, not look to short. We could look to buy, okay? But even I can see now, buyers are buying and they're getting rejected there, back down. Buyers are buying again. And then that big bearish candle is bullying them back down. That was a strong bullish candle right there. We impulsively, again, they pushed it down. Look at this, ignited, coming back down. So I don't even see any closing blue volume above this trend line, nor do I see anything targeting this hourly resistance or in this red line. So sellers are still in control. If you are buying, you're buying against the trend right now, okay? Let's add now our daily bar indicator to let us know how the daily volume, look at we're right back at the opening price, okay? So this is why I love to see the daily bar. So we know it was really bullish, coming back down, and we're right at today's opening price. And this is where we're getting this congestion of volume. We're getting a lot of buyers and sellers accumulating. So we're smart. We know that gold is not just going to trade here. Maybe it will possibly break out to the upside. If it does, we'll look for that buy coming back up here. It could be just still consolidating in this neutral shitty area above this red and green zone on the 5 minutes. There's our neutralized zone. And you can see sellers are accumulating, buyers are accumulating. Or we might, you know, continue to push to the downside and do something like that. However, what we also got to watch out for is fake outs. Okay, the market loves to fake out. So it might show us that it wants to move to the downside. Maybe it might be like an impulse, big black candle coming down here. It catches a wick and then it goes back in and then it closes back above here. And we don't fall for that. Then that gives us a little bit more context to what's going on. Maybe they grab all the liquidity down there. It closes back here, retest this. Then we go into a buy. And then that kind of is like the trampoline that kind of ignites it to continue to go up after they take out all this liquidity. Same shit can happen above us, okay? You know, buyers could break through here and then it's a big blue candle breaking out. Maybe it takes out that high and then it kind of gets rejected back down in here. Test that, then it could be selling time, okay? So we also got to watch for fake outs too. That's why we got to be very calculated with our trade? Are we trading on impulse, or are we going to wait for candles to close? Okay, does that analysis help you guys? Jay Lavish, I just had you have a light bulb moment. Share it with us. What's the light bulb moment? I might smoke a joint with you right here, and I might have my own light bulb moment. What's the light bulb moment? Guys, if that analysis helped, hit the likes on YouTube, subscribe to the channel, and we'll do more. We're going to do also, we got to do US30 and NASDAQ. Now, okay, the reason why I do this, okay, I don't just do this to make my charts look fancy. I know they look really nice and fancy, but I trade these lines all day, every day, okay? That's why I do this. Again, I don't do this to make my charts look fancy. I do this because if I'm taking a buy, listen to what I'm saying, guys. This is where you have to pay attention. If we get a closing bar, like let's say it's blue closing above here, I'm going to flip that red zone green. If it comes in there and starts to build in here, for example, okay, example, this is all hypothetical, okay? If we see this, comes up there, we get a closing bar. We don't want to buy the high, we're not FOMO traders. We want to wait patiently, like smart institutional traders, to come in and accumulate this block, because now this block changed from red to green. So then I see it continue to build, come back up, maybe right there. That's a good opportunity. I got a lot of confirmations, and I want to take the buy at the yellow line. There's the cookie cutter approach, 1-to-1, okay? But maybe I want to do this. I want to go from yellow line, point A, destination will be the next yellow line, point B, okay? And that's my target, right? I don't want more, I don't want less. I just want that volume to fill from there to there. I'm measuring it now. Holy fuck, that's 125 pips. If I hit a 125 pip trade, I'm jumping up and down and I'm cheering. For me as a scalper, I'm normally looking to scalp maybe to 50, like right here. This is what I do, guys. So I would cut that blue candle in half, and I'm aiming right there, 3,996. So sometimes I'm just looking for a trade up to there, and that's still 60 pips just to fill up to there. But for example, if we get that full line fill up to there, then I have to be doing something. Okay. Normally, if I'm in the trade and it's coming up right up to there and it's breaking that, then what I'm doing is I'm taking my stop loss and I'm going to break even. I'm reducing all risk. See how I put the cookie cutter approach where I put my stop loss there? I can go with the cookie cutter approach, but I'm looking at structure. So maybe I want to keep it just below the green box if it has to come back in. Some traders will say, Ron, why don't you go below the deeper green box? That's fine. But then you see how my risk to reward ratio, I'm not getting my 1-to-1. So you're risking and your reward. Then you're looking to maybe increase and get it up to where? Maybe to possibly that red block up there. Okay. Then you're getting a way better R&R. You're getting 1 to 1.5 on your money, whatever. But I'm targeting right there. So then even if I go with a tight little stop loss right there, I'm getting 1 to 2 on my money. Okay, so that's a pretty good R&R for R&R traders. And then as it starts moving up 60 pips, I don't want to stay with an open stop loss. You can go to a break even, but remember, sometimes it'll come back down, tag your break even, and then take off. So this is where I say, guys, if you don't want to go to a technical break even, give it maybe 5 or 10 pips of breathing room, right? If you take a loss, okay, fuck, we take a loss, but it's not losing everything. It's just losing right there. Okay, we can trade losing 10 or 15 pips, no problem. And then what if it comes down there and then it takes off? Okay, so that's demoralizing when that happens. You had the right setup and then you had too tight of proper risk management. But regardless, you got to know what type of trader you are. I'm a scalper. So whenever anything goes up 50 pips, I'm going to a break even automatically. And then as it goes through here, I'm scaling out 80-20 and leaving the rest running. That's me personally. I trade different from other traders. You trade how you got to trade according to yourself. You'll figure it out. You don't got to mimic the way how I trade. I'm not asking you to. Okay. I'm a different breed the way how I trade. I told you guys, I am a pure scalper. I would love to hold trades to go up 200, 300, 400, 500 pips like some of you guys. I don't. I take maybe 10 scalps for 50 pips each, and it's a total of 500 pips. You might be looking to take one whole trade and go up, down, hold that thing for hours and hours and hours to get to your 500 pips. But me and myself, like the way how I trade, I might be in that blue candle, get 50 pips, I'm out. I might be looking to short that, get 50 pips. That's 2 trades, 100 pips. I might look for 5, 10 trades a day, hit 200, 300, 400, 500 pips a day, the way how the volume is moving. The volume never used to move like this years ago. You were lucky if you got a 5-minute gold candle at this time of the day for 10 pips, 15 pips. Now we're getting every single candle is 50 pips. It's crazy right now. So this is where you got to learn to lower your risk. Because if you go in drawdown 2, you're going to be in drawdown at minimum 50 pips too. Okay, guys. So we're coming right back up. We kind of got above that trend line. So let's see. Are the buyers going to close above here, or are they going to push it right back down on us? Is Donald Trump speaking right now? Okay, I didn't even know that. Okay, so Trump is speaking right now. I don't like trading when he's speaking. I'm sorry, guys. And guys, just to show you, let's see what we got going on here. 1 second. Guys, this is in our Discord, Gold Traders. You know, this is gold. We have a gold group in here. This is Tyler. Tyler was up here. This is a member in our group right here. Took gold, sell, standard lot from 4,006 all the way to 3980. Amazing. For 2,600 US dollars. That's a 270 pip move. Unbelievable. Okay. I'm just going up here. Forex Borex sharing his charts too with the team. Borex taking a sell from 13 to 90, $2,000 move. Tyler over here, take a small feeler trade, 0.01, maybe figured it out, and then went in with a standard lot and got $500, $600. Guys, these are not me trading. These are members in the group doing this. Okay, so congratulations to everyone, Reese, Akon, all of you guys, continuing, Carl, everyone working as a team around the clock here. So good job, guys. Continue the great work, helping each other. It's fantastic to see. Appreciate this. Also in the indices group, we got Serge, Bernard, Scotty's always in here, Noor's in here, everyone is in here. Tyler, holy shit, Tyler's cleaning up indices and commodities. So congrats, guys. Good job. Keep it up. It's awesome to see. Okay, so guys, look what just happened. Okay, we're just playing ping pong in this area. Came up bullish again, tapped into that red zone, big bearish candle coming right back down. So regardless if you're taking buys or sells, I understand this is frustrating, okay? I would be frustrated as a buyer, and I would be just as frustrated as a seller, okay? This is where you got to acknowledge that we're in this tight range right now, okay? So gold is still accumulating, okay? So do you guys want to continue to watch gold the way it's in here? We'll watch for something, maybe a fake out, maybe a close, maybe, or do you want me to continue with US30 or NASDAQ, do a top down, and then we'll have two charts, or do you want me to stick with gold? I move with you guys, okay? It doesn't matter to me. I'll trade anything. We could trade cattle. You know, we could look at soft commodities right now. We could trade lumber. I don't give a shit what we're trading. If there's candlesticks on the chart, I can trade it. You guys tell me what you guys want to look for. NASDAQ? Okay, guys. Will you guys let me know? Okay, just all I need is if you see gold making a move, breaking above here, just say, Ron, heads up, gold is breaking. If you see it breaking below this green zone, just say, Ron, heads up, it's breaking. I can place alerts, but sometimes I'm doing the top down and I don't even look at the alerts. Okay, so maybe you guys can just alert me if you guys see something. Okay. Right now, let me try. I'll put an alert right there. I'll add an alert at that white line. And I'll add an alert here at the yellow line. Okay, but also you guys, let's get in the habit. You guys remind me and we work as a team here, okay? And then I'll flip back to this. If it's still in here, okay, we know it's accumulating. You guys don't need to tell me, Ron, I know if it's in here. We want more of something to happen up here or down here, okay? And then we'll do NASDAQ just in the meantime. Remember, my baby is right here. My baby is US30, okay? Don't neglect my baby over here. But NASDAQ for you guys, okay? Holy shit, okay? So NASDAQ made a big move, selling off. This is Wall Street, came back up, pushed back down, new low, consolidating bear flag, coming back down. Now it's building back up. It's trading, nice candles. not too choppy, but nice, okay? So let's go on the daily, and let's figure out what's going on with NASDAQ, okay? I'm not going to go all the way back and describe what's happening over here. I'm sure that you guys know all about that. Let's do top and work our way down. Do we have an all-time high on NASDAQ? Yes, we do, right there. It traded October 30th, the day before spooky Halloween. We hit 26,285. Orange line for Donald Trump's face. And do we have some structure above there? Yes, we do. Orange line, Donald Trump's face. We've got multiple bodies located right in this area. I might even just extend it down to those bodies. So you see how I now have figured out a red zone. That was the first all-time high and the push down. So we have one leg up, one leg down. Let's continue to stretch that zone into the future. Will NASDAQ ever come back in here on daily? We might get positioned to sell it with the all-time high a second time. And that might be the one with bigger volume to come down. Remember that guy Michael Burry who shorted the markets in 2008 during the financial crisis? He's put majority of his hedge fund company, like 60% on puts, is all on Nvidia and Palantir. Okay, those are tech related securities, and he's going all in on shorting the market right now. And he's buying up Lululemon. I don't know if he likes sexy women's legging pants or he likes to look at women wearing those. I have no idea, but he's going heavy on Lululemon. I don't know why, but it's at a substantial discount. Lululemon has dropped over 50-60%. So you know when you're buying, ladies, if Lululemon at the stores put Lululemon, those pants, 50-60% off, are you going to go buy those pants? That's so the security price of that company is the same shit. It's down 60%. And he's going heavy on calls on Lululemon and short on Nvidia and Palantir. He's maybe making a big mistake. He's over leveraged. I don't know, but he called out the financial crisis in 2008 and made a shit ton of money. He's also called previous market crashes, and he's been squeezed. So, you know, he's not 100% this guy, okay? But that's what's going on, okay? So we got a leg coming down. We can see it made a lower low, came back up, lower high, okay? So moving our way down. Is there something? Yes, there's the big bearish candle. Let's analyze that thing. There was the opening price, closing price. Can I determine where 50% of that is? Yes. 0.5, yellow line, point of interest, no longer Donald Trump's face. And we got to now figure out our point of control of that big bearish candle. It's right there. I can see now we literally traded in it yesterday and it got rejected. We traded in it today. Look at today's high, pushing down, okay? We got a 3-bar. Do you guys play this game Tetris? Okay, there's Tetris. Do you guys understand this Nintendo game? Sorry guys, I'm old. I used to love this game. I got the old school retro Nintendo, and I play this shit every single day, and I kick my son's ass in this game. I'm a Tetris pro. I'll play anybody. This game. See these blocks? Okay. Learn. Video game. Trading is a video game. Okay. You see, this game teaches your mind how to predict the next piece of the puzzle. When you're playing this game, there's always the next piece different and it always in the corner. So you got to look at the piece and determine, because they're coming down fast, you got to position it to keep going down or else you'll lose. So like this piece coming down, this is a Tetris piece in trading. This is called a 3-bar play. I know a lot of people, including myself, that have made a lot of money just recognizing this play in the market, okay? You see what it is. It's a big bearish bar coming down. You have your inside consolidation, and then it continues to the downside. You can sell right there, stop loss above, and make money. But this is just like this pattern, and that's it. And then you can also look for the same pattern going bullish. You'll see a big bullish candle, you'll see an inside black candle, and you'll see a continuation of a blue candle. Get to know this, add this piece in your playbook, because I guarantee you, and please guys, practice playing Tetris. Beat your kids in Tetris. It teaches your mind how to think fast, and if you're scalping 1-minute candles, it will really, really improve your trading, okay? Tetris, fantastic game, guys. Okay, there it is. You're seeing how it looks now. Okay, so where did we close? There's point of interest. Body closed, body open. There's another yellow line. So when today we opened, there it is. There's the opening price. Okay, let's see. Closing, opening price. Right there yesterday, today. Today was initially bullish. Bullish. Look at what it traded right into, 50%. You can see that yellow line. I'm going to bring it right down. And that's a purple line. That's my highest point of the day. So I can see NASDAQ is trading right in, 50% of that point of control. Rejected. Those sellers are there offering heavy. They offered there. It's lower than yesterday. We're still below this bearish ignited candle, and we're still below the all-time high supply. So whoever's shorting the market is making a shit ton of money right now. So puts are going wild in the markets right now. Look, then we came back down, rejected to the opening balance. There we filled. There's consolidation. There's that Tetris piece I'm talking about. There was a flag in the market. It's a bear flag, right? There's the volume trapped, and then they broke it down. So we have a big wick also yesterday, where yesterday's low was already printed, and you see we already have broken it, okay? So we came down very heavy, NASDAQ selling. We have a new low of the day right now already in the market right there. There's my purple line of the day. Alert came on gold. Okay, let's go right back to gold. 1 second. I'll come back to NASDAQ. Let's take a look at gold. Okay, so you see, guys. Now, what can happen here? Okay, so this candle's closing in 3 minutes. Let's see if it's going to be an impulse break to fill this wick right here, okay? Because this was right here. This candle at 10:35 was a big bearish candle, bearish candle, came down, collected a wick there, and came right back up. Now we're breaking down. See how it broke down? So it broke. So it's created a new lower low in the market, okay? Now let's figure out where this body is going to close. You might be in a sell from up here. You might be in a sell from this candle. You might also be in a sell from the top of this candle, okay? I'm not in a trade right now. So what I'm watching for is I don't want to just sell on FOMO. We're like the lowest point, okay? Remember, that's not a strategy in trading. It's probably the worst strategy. So then what we got to do is, first thing I'm looking for is, let me see what Trump is saying. It would be devastating if the Supreme Court rules against tariffs, okay? So Trump, Americans should pay the lowest global prices for drugs. Fed Williams, large-scale AI. Okay, so Trump, many widely used drugs are to be sold at 60% discount. So he's talking about pharmaceutical drugs, not cocaine, not heroin, or those type of drugs. But he's talking about pharmaceuticals, guys. Okay, but look, that's it. Look, fake out, okay? So it came down, took out that low. So we know that they've grabbed some pending orders, liquidity down there. And we still have 90 seconds to go into the close. What if this candle flips all the way up bullish, okay? And then close, then we could get another bullish move coming in here. So we got to follow this. Is this candle going to close below here or not, okay? So that was a nice candle dropping down, but you see how it came right back up, okay? Now let's watch the closing. I just want to look at my spreads as well, guys. 1 second. We'll go back to NASDAQ. I know we left off on the daily. We're talking about that Tetris piece. But right now, let's see what gold's doing. Okay, I've got a 0.8 spread right now, which is rather high for me. So I know that there's some type of volatility in the markets. Okay, so I'm just telling you guys ahead of time because I know there's like a little bit of a delay on YouTube and things like that. I want you guys to know what I'm doing ahead of time. If this black candle closes below, I'm going to make this green box red because it's confirming to me sellers are closing below here where they have not closed for a long time, okay? So then I'm just going to temporarily make that zone red. Then I assume that buyers will buy into that red zone, and then if I see it get rejected, then I might continue selling down. However, if it closes inside the green box, it's still a green box. And then next candle could open blue and come back up. But it still could get rejected where? At 50% of this big bearish candle right there, okay? So look at that, guys. Let's watch this. Oh, man. You guys got me thinking of Tetris now. I just want to end the call and go play Tetris right now. Anyone want to play Tetris with me? I'll kick your ass. I guarantee you. I'm just joking. I suck at Tetris. Okay, so it closed in the green box, right? So it's still a green box. We see it broke. But technically speaking, did any black volume close below there to confirm that? No. Okay, the answer is no. It's like saying 2 + 2 is 4. Yes, I know. But if someone tells me 2 + 2 is 5, I'm going to say, what the fuck are you smoking? Okay, it's not. But if you tell me that candle closed below, I'm going to say to you, what are you smoking? Okay, it's not the good shit. You got to smoke some other shit. Okay. Now it's coming back down, bearish ignited. So it opened a lot of selling pressure coming back down, okay? So you maybe sold this candle, that's fine, but we're looking for more confluence. We're looking for more, we're looking for bodies to close, right? Because this is still technically another impulse candle breaking down. And if you're in, fantastic. You're in the money. You're doing great, okay? But I'm saying for a trader right now like myself to just jump in, I want to wait. And Trump is talking here. So I'm trying to hold off too. I don't want to take a trade when Trump is talking. But pattern-wise, like it was descending. So the descending pattern held up, okay? So you can see if you were buying against that, then now you got some review to do. Why were you buying against a descending pattern and the entire day has been going down? So you see that you were buying against the trend. That's a costly lesson. If you got stopped out, now it's time to learn. You should have maybe had a sell side bias, okay? It's fine. I make that mistake too all the time myself. But now you got to learn from it, okay? So now let's see. This bearish candle is dropping into, remember what I marked off? That 50%, that red line right there. And also we calculated from the purple to the white line. We found that point of control. So we're right in it. If you're looking to buy, like if you were buying up here, you're getting a substantial discount to buy all the way down in here. You're getting a 150 point discount, okay? And think about those buyers up at the high. They're in 150 pips of drawdown if they're not out of the trade. And this is how close we are to the lowest point of the day, okay? So this is still heavy selling pressure. Look at how the daily candle has flipped and we have selling pressure coming down. Wow. Okay, so this might be our first body to close below this zone, and we're still going to go through the motions. We're going to make this green zone red. Because then if it comes back in, I might be looking to sell at that red box and then push down with more sellers, right? And then at least I have confirmation. Maybe I wait for to sell at a premium area. Maybe I wait for a pullback to continue to come down and maybe take out that lowest point of the day, okay? Or I'm going to sell at 50% of this bar if it closes down there, okay? If it comes back up into here, I'm going to move my cut line down to represent 50% of this. I might go in that. Is anyone in a trade right now? No? Okay. Okay, then if we're not in a trade, we got to really focus on what's going on at the lowest point of the day. Are they going to sweep this liquidity and come back up? Our RSI indicator is down to 30, so it's telling us we are technically oversold now, but this can continue to go down, okay? Here's the close in 1 minute. So I'm going to assume that we're going to close below this green zone. So I'm going to go ahead right now and make it red, okay? And if it closes below this one is also going to be red, okay? So they're only $3 away from the lowest point of the day. Here's the close in 20 seconds, guys, okay? And remember, if you're going to sell the lowest point on the next candle, remember, you're selling at the lowest point right near the lowest point of the day. You have to be very careful because there's a lot of sellers selling up here in the money. Okay, maybe you should wait for a decent pullback and sell at a premium area up here. Okay, so there was a close. Did it close below this zone? Yes, it did. Okay, so green to red. It opened bullish. Didn't even break that low wick, so it's coming up strong. Now let's see if it gets rejected inside this first red block. Remember, it's better. Let me just cut this in half. Okay, let me just do this all over again. I'm gonna just reconfigure here. Okay, so I want to measure that big bearish candle. Know exactly where 50% of that big candle is. There it is. And Okay, so I know where 50% of that candle is now. So it's just above. So what I'm going to do is just manipulate this red box right up to that red line. Okay, so there's the first rejection. It got rejected. This could easily pop that candle and just start shorting down again. Get ready. Okay, so there it just produced a new low. We're right back to the opening balance of this candle. If we're looking to short, it could, but it could catch you in a short and go right back up. So I'm going to hold off. Okay. I don't want to be faked out at the lowest point of the day. I want to see, will it come up higher, 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 higher? Will I be able to sell here or here? Or will this candle come up blue and close above here and have one more? See how it's still coming in here, and a lot of sellers are still in here. So they're still holding all of this bullish volume down. This technically may break even lower, okay? So sometimes it might be thinking about continuing to sell the lowest point of the day, then it will really bleed out. But it's kind of like a risky trade, but that's why I wouldn't put too much, I wouldn't lower my risk on this type of sell if I'm taking it. Okay, so it's coming right back down. Okay, one more time it comes up, now goes back down, up, down. Let's see, it's a little bearish pin bar. Okay, one more time. If it comes back up, it's continuing to load up and wants to fall. There it comes back up to the opening price. Blue. Let's see one more time. There's still 3 minutes left on it. Still a lot of time on it. Okay, so it's just hanging around here. Okay, now, fuck. I like it, but still holding off on this. I don't want to get tricked on this candle. It's a tough one. It's one of those ones that are just always like kind of hanging around the opening price. So you got to be careful with these guys. You got to be very careful. And then look at the timing too. It's almost 12:30. So we're going to get a new 30-minute candle in the next 2 minutes. So maybe we hold off. We look at the 30-minute time frame. Okay, we got a big 30-minute candle that's breaking. So you got a wick, a wick, a wick, a wick on the 30-minute candles. So let's see if this 30-minute candle in the next 2 minutes will break the lowest point of the day, or will it come back up? And the next 30 minutes might be a bullish return. So I'm going to hold off. Okay, regardless what this candle does, I'm holding off. Yeah, there's some crazy moves in gold lately. 200 pips in a 30-minute candle. It's I know we're seeing about 50 pips average on each 5-minute candle. So, 200 pips on a 30-minute candle is just, according to Go, 5 by 6, that would be about 200 to 300 pips every 30 minutes on gold. So there's a lot of money to be made, but there's also a lot of money you can lose if you're on the wrong end. Okay, so we got a bullish candle trying to come back up. We're still trading in this red zone. Okay, so you see how kind of they faked out those sellers down here. Okay, I was considering to sell, but I held off. That bullish, that pin bar candle kind of kept me held off. And then I saw we were going into the new 30-minute candle in the next 2 minutes. So I said, all trades are off. Okay, so let's see now where we close. Maybe we'll get one more bullish bar coming back up. I'd like to sell the regional red zone up here. Maybe sell here. However, if this builds, maybe entertain a buy coming back up. To scalp it back up to here. Then I got to know if I'm in a buy and I'm in the profit up to here, I have to understand that those are where I would originally be selling. So I'll exchange the bag to them and maybe I'll continue to sell right there. But regardless, let's see how this thing closes. Okay. I'm going to zoom in a little bit. Okay. So I'm going to zoom in on the 5 minutes, guys. Hopefully that's okay with everyone. I'll just leave the daily candle to the side of us. Oh, did you guys want the EMAs? We're below the 9 EMA, and the 200 EMA is all the way up here, okay? If you guys want those EMAs, I just added them. I don't really use EMAs in trading. Okay, 10 seconds to go into the close. What is my lot size? I use a billion trillion lot size. A zillion size. It's not even, you can't even get it with your broker. It's not available. I'm just joking. I trade small sizes, small, micros. Okay, so it opened, it came up. Did it take out that high of the previous 5-minute candle? No. Okay, so are we kind of maybe flagging or consolidating right in here? Okay, so I'm just going to make this area neutral. just so we can figure out the consolidated area. Is this going to be a bear flag coming back down? Yes, it could be. So get ready. You know, like we were talking about those Tetris pieces. Bearish candle, inside blue bar. If this thing comes down, get ready. We could continue to sell down right as soon as it breaks. And it would be an impulse trade because we're trading it to fill that wick and break the lowest point of the day. Okay, so you got to understand that. You can wait for volume to close too, but if you want those Tetris kind of moves, they just break down and continue dropping. So as it came down, it's flipping back up bullish now, okay? So trading now into the red zone. That's 50% of it. That's 50% of that red candle right at the top of the red zone. So we're still kind of in here consolidating. So let's see if sellers, will they push this thing right back down, or is it holding bullish to return back up? And remember, if we're buying, we are counter trading against the overall trend. Okay, you got to understand that. So that's where maybe a pip and dip. Like if you get in kind of like a buy and it breaks through there, you could be up 20 pips, could go to a break even. If it comes halfway up here, you're up 40, 50. If it taps into the top of the bottom of that red zone, remember, that's where big sellers could be selling and you're up 60 pips in a buy. You should be doing something because it could come right up there and come right back down. Okay, so you got to understand, are you trading with the trend or counter trading? If you're buying, you're counter trading. If we sell, we're still trading with the trend. But we don't want to just sell the lowest points. We maybe want to sell here or in this red zone. So now it's a nice big bullish candle coming right back up. This would be a good candle to maybe just entertain a buy to see if it can come through here. I'm going to go in, okay? It's a hammer candle building. I'm going to see if I can just scalp my way a little bit. I know I'm counter trading. My stop loss, I'm going to place it just below that wick right there, below that 5-minute wick. That's where my stop loss is going to be. I could go right below the low of this point of the day, but I'm just going to place it right below there, okay? Because then sometimes when they break below the low of the day, it's a big drop, right? So let me just measure. I'm in a buy, countering back up to this red line, 15 pips, but to come up maybe, let's say halfway, that would be about 30 to 40 pips up there. That's where I could just bring my stop loss and go to a break even, okay? So this is small risk trade. Just seeing if we can build a little bit up to figure out maybe if there's going to be a neckline somewhere like right around here. Trying to, you know, figure out where the point of control of this big bearish candle is. Maybe it wants to trade somewhere inside there. I wouldn't mind grabbing 20, 30, 40 pips on the way up and still respecting that, okay? So it's kind of in the money, but not huge, okay? Remember, we just measured up to there. It's only 15, 20 pips. But enough for a micro scalper to go to a break even at 15, 20, 30 is right there. So I'm going to target maybe 35. I'm going to start to reduce risk. Now look at my risk. I'm going to go below the consolidated block. I'm going to bring my risk below this wick of this open of this candle. Okay, so I've reduced my risk while I'm in the money. There's a good push. 1 more minute to go. So you see how I reduce my risk while I'm in the money. I'm going to go to, oops, not that. Okay, so that's 30 pips up there, okay? 30. Counter trading, counter scalping. Okay, so can we fill back up to the high and jump? There's the 9 EMA. Some of you guys target 9 EMAs. I don't know, I don't, but some of you guys do. 9 EMA, I like the number at where the 9 EMA is, 3975, 3975. If it can get up there, that would be about a total of 50 pips. So that's technically exactly where you could look to pip and dip if you like, okay? Here's the close in 30 seconds. Can we close above, while we're in the trade, can we close above the red zone and maybe we can momentarily flip it green? Maybe we'll get one more blue candle breaking out of here, or maybe a quick little retest that can go right back up with a wick. So let's see if we can technically close above this red zone while we're still technically in the money right now, okay? And I've reduced my risk. My stop loss is just below the wick of this candle, of the same candle I'm scalping. Okay, we did not technically close above there. Nasty. Okay, so they closed it right below. It opened bearish ignited coming down. So we got a quick little wick. Now let's see if we can fill our wick and just drive a little bit more. Even one more push to that would be about 40 to 50 pips. And then that would be full break even and then exercising 80% out of the scalp if you like. Okay, so we're struggling still to come up here. So if we pull back, we're going to pull back into at least test 50% of the candle, and that's exactly where I entered. Okay, so if it pulls back into 50%, that's where I entered the trade. That's why I'm giving it some room to breathe. So we're building back up. It kind of refueled itself without coming down. There's those. Is it an equal high? No, we got a little bit of a higher high, so that could continue to extend this volume higher. Okay. And guys, you guys know the rules. Okay. And then it comes up there, you can go to a break even and scale out if you like. Remember, we're counter trading. So there could be big sellers here that when we come up here, they're going to sell it back down to us. Okay. So we're trading now in that neckline. Like if I look at the point of control of this, guys, you got to do this shit on your own because I'm doing something else right here. So if you look at the bearish point of control of this big bearish candle, look at what we could be trading into. There's the 382,618. We're right in the block right now. Right there. So if I make that a big red zone from this big candle, you see, guys, we are transacting. We just got above it, but we're getting rejected back down. So if we can close again, if we're still in this trade and we're closing above here, we could flip the point of control of this candle and maybe build to get up to the upper zone. Okay. I'm reducing all risk in this trade now. I'm going to a break even now. I'm at a BE, no risk. It's up almost 40 pips, 35, 40 would be right there. 45, 50 to the top, okay? I'm at a break even in the money, okay? I haven't taken out anything. Not yet. Maybe stupidity. Yeah, I'm going to take out now. Got to my point exactly. 3975, 80% out at 3975. I'm an auction trader. I don't give a shit about anything else. I bought at 3970, closing at 3975 for 50 pips. Counter scalp. I'm not looking to go take this to the all-time high. From here to there. Get my money, get out. And if it goes more, I still have 20% remaining to continue to go. Do you guys understand that trade? Did I break it down properly? It's live, guys. This is live. This is not back testing. And it's a counter trading. So you really have to use your rules. No fucking around here. Because a seller could just drop this shit like an elevator on us. Top Duck this is great. Is this legal? I don't know. Hopefully it's legal. Hopefully I don't get put away. You guys don't want to see Uncle in jail. I had a conditional discharge when I was really young. I don't want to talk about that, but that's done. Okay, guys, good. So you see where I closed out. I told you guys, like, you can target that 9 EMA, but I like the number, 3975. You guys might hear a little fan in the background. I got a built-in fan for this smoke. I made this nice room over here where I can smoke in here. Have a good time with you guys. Okay, are we, guys? And 20% is still running. But remember the bigger target zone. Remember we started the call? So we're could be targeting this initial red zone right here. That's where the big sellers could be. You know, like sellers could be waiting to sell at a premium. While it's coming back up, they'll sell it back down. So you really have to respect this zone above. But we got 45 seconds to go. So what we're going to do with this point of control of this candle, if it flips, we're going to invert it green. We might be building off of this to continue to run up a bit. So we got to follow the close, right? Did anyone go to a break even at least? Has anyone scaled out? What have you guys done in this trade? What are your trading rules? What have you guys done? Or are you still holding it? Dragon, you got out at 58 pips. Nice. Good job. Okay, here's the close. So look, we closed at the high, short wick. We could technically, if we keep, yeah, pop right now. Okay, so red zone green. Guys, we got to, maybe we'll get a runner here. Okay, red zone green. Okay, so that point of control is representing this. Okay, I'm just going to get rid of, I know I have a shit ton of blocks in here. Just want to get rid of this. Okay, so now we're going to target that upper red zone. I would say, 50% right there would be 70 pips right in here. So there we go. We're coming up, filling up to there. And then that's a big daily yellow line, 39.80 up there. So you see where they protected it from breaking down? 3965 from the low of the day. Okay, so that's why I held off on a sell. Remember, I was entertaining. I was looking to see, but then when it came up, then it officially, and then I said, guys, 12:30. So look at the 30-minute candle. 12:30 is bringing our run up. So we waited patiently. We let it sell off, come down to near low stay, and then we took the buy on 12:30. Good move, guys. Guys, Are we, guys, this is 60, 70 pips up here. Okay, to the top up there, holy shit. Okay, that's where I might close full TP. Like the rest, I have 20% in it. I could close out now, but maybe I'm going to hold this one with you guys. I'm going to hold it with you guys. Okay, I normally don't hold trades with you guys, but this one, why not? Let's see if we can get a 100 pip banger on this. Look at how many bars does it take to engulf this big bearish one? 1, 2, 3, 4. Okay. Are we going to engulf this big bar with 4? It took 4 bars maybe to engulf this. So this is where our neckline is possibly going to be. Holy shit. Holy 80 pips, guys. And then, wow. This is nice. And then we got 50% exactly would be 100 pips to right there. And that, and guys, if you're continuing to hold in the next 2 minutes, if we invert this red zone, we could drive a little higher. But 100 pips, everyone, please, that could be a daily goal. And we're still counter trading. And that would be demoralizing if they slam this shit back down on us. Okay, so I'm closing out 20%. I do not give a fuck. I'm closing out the rest, 20%. My entire trade is out 100 pips. Wow. Done, and done. Are you guys good shit? Wow. Wow is all I can say. Holy. We flipped the whole daily candle back to the opening balance and could continue to drive. My goodness, guys. Patience, discipline. How much drawdown did we realize in that trade? Let's talk now real facts. How much drawdown? Last time I checked, 0. And you remember where my stop loss was? It was below here. Then when it started moving, I took my stop loss below the entry wick of the candle. Then finally I went up. So guys, 0 drawdown and you got 100+ pip trade. Scalping. It can be done, but it's just patience and discipline. Okay? I'm telling you guys, it's a art what we do. It's kind of like a skill you got to learn. It's kind of like a sports player does his shit every single day professionally. Traders do their stuff every single day. Does it always work like this? No. But, oh my God. I'm not in this trade no longer, okay? But I'll continue to help you guys. And guys, shout outs to you guys letting me know when it broke down. Because if I was still on NASDAQ, remember we were still doing NASDAQ? We were talking about the Tetris piece. That's why I like to come back and watch what happens when it breaks these zones. You can kind of put the pieces of the puzzle together and figure out what's going on. So that's a beautiful return. And look at where we're trading, right back in that garbage consolidated zone. So we're right back into here. We basically rebalanced this big drop. So now the market has rebalanced itself, and we're right back in the consolidation where we were trading earlier when we started the call. Oh my God, like what a return. And then when you're all done, tidy up your chart a little bit. Get rid of a lot of these cut lines. Tidy up. I always tell my kids when they're done playing, tidy up your shit because I'm getting too old to pick up your toys. So look at, again, we closed above 50%. We still got some volume. This zone you can go back to green. Remember our original zone. Maybe this is going to start to develop with more pending orders. We have our block below us where we got in right there. I'm not in this, okay? So remember, I took out 100% of my trade, but if you guys are still in, you got to know where you're trading. Always recognize that this is still that red zone above us, okay? And then that's a white line. That's hourly resistance. So total, if it gets up there, is 150 pips. That's where, if you don't do anything up there, there could be a big hourly block and ready to push this thing down. I'm not saying it's going to come tumbling all the way down, but it could come back down to retest this green box and go back up. It could come back down to test the zone that we bought in right there, right? But you're giving away all of that profit. If you kind of close out a little bit up here and it comes down there, you could rebuy right back in at a discounted price down in here or down in there, okay? But if it comes down, you're pissing away your money, right? You don't want to do that as a trader. Learn how to put some money in your account. That's how the account grows. And then you can keep compounding this. You can do this today, tomorrow, next week, next month, next year, 5 years from now, 20 years from now. You can do this. Wealth Kings, how in the world did I manage to know this was a fake out? How did I know it was a fake out? What do you mean? To me, I don't look like this big black candle is, you know how kind of what got me? See how they redistributed. Listen, guys, this is where you can pay attention. Okay. So this is where I'm breaking shit down now. This is where the sellers, buyers and sellers were accumulating in this zone. The sellers won it. So they redistributed everything to the downside. And we were very close to the lowest point of the day. And when they were kind of selling down here, there was no more increased selling volume. So there was no buyers that wanted to bite down in here. The buyers were asking to trade up here. When I saw that, that's what made me go into the buy. Because I saw that there was no buyers, down near the lowest point of the day. They were asking to trade above 39.70. So when I saw that, the selling move kind of looks like it's exhausted. Like the sellers can't find any more buyers. So when you can't find any more buyers, the buyers are asking to trade up here. So naturally, we got that next leg going back up. So hopefully kind of that explanation helps you out. But it kind of looks to me like all of this accumulation, the sellers won it, they redistributed it, and the buyers prevented it from breaking the lowest point of the day. Sellers had no more offers down here. And then it looks like the buyers were stepping back in. And then just going candle by candle, it's making higher low, higher high. A new opening, higher high, closing near the high, small wick, pullback, continuing to drive, closing near the high. Look at what it's retesting now. Our cut line that was right there was resistance. Now it's support to continue to take us up all the way to that hourly target, to that white line. And guys, that is a banger. If that doesn't deserve a like on YouTube or a W or smoke a joint, or I don't know what else to do for you guys, okay? But that's a solid trade, because I look at the drawdown. I don't look at how high it's going. I look at the drawdown, zero drawdown, and it just continues. So we basically snipe that entry. When you take a trade and you have zero drawdown, you nail that entry at the best point possible. It's not about showing off or anything like that. It's just watching structure develop and build, okay? Hopefully, guys, you guys, benefited from that and had some fun. Saying you missed it, it's okay. There's going to be another trade. Don't get caught up. Sometimes I miss trades too. But when we miss trades, then we get excited and now we want to buy the highest point. Remember, there was traders like us that bought down in here. So we're looking to close out positions, right? And this is a block of sellers. So technically, we may be getting the bearish leg to come back down. But when it comes down, it might come back down to test this zone and go back up. Maybe this volume is continuing to drive and close above here. Again, guys, you said Donald Trump was talking. I have no idea what he was saying, how it affected the US dollar, or what was going on. I was following price action. You still on a seller or not, Frank? I want to see what happens. Okay, so maybe I'm out of the buy now. So maybe I have a sell side bias with the previous sellers. But then we got to go through again. Let's see. Will it trade in here? Will it come back down? Will it do this? Then, Frank, maybe we can look to sell that. Are we going to see a fake breakout? Like, are we going to see a big blue candle break right through here like we were originally saying? What if it goes above here, closes above, we flip this, and then we can't sell? Then it's continuing to drive, right? Or it's going to be one of these impulse candles that fake out, get a wick, close back in here, slam it down, then we maybe sell that way down, okay? But I don't want to sell right now the highest point of this candle where it's still ignited and continuing to drive. It's a risky sell. You're just relying on this zone and that zone at all only. But it is trading at an hourly point of interest, that white line, okay? So, and it came to a perfect point, okay? So that's 150 pips. If I was still in this, I would be closing my entire trade right there. I don't care if I had 5%, 10%, 20%, or 100% remaining in my trade. I would be closing it all out. And then I wouldn't be worried about the woulda, shoulda, couldas, what could have happened. Okay? You can't look at trading like that. You got to look at it like this is a block where sellers are. This is a block where buyers are. That's the way I look at it. And that keeps me profitable every single day. Because every single trade we take, we can say, oh, it should have done this, it should have done that, should have done this, it should have did this. But if you get that type of mindset, you're going to get so confused in these markets, you're never going to know what to do. And also, 39.90 is a daily point of interest. Okay, this is hourly, right? But this is a daily point of interest. So there's more pending orders at a daily than there is at an hourly. And then I have to ask this, okay? And I'm sorry. Is anyone still holding this trade? Because I know a lot of you guys are crazy animals. If there is, I'm going to say God bless. I hope this goes to the moon for you guys. Philosophy, you made 1.2 on your account. Sergio, you got out, but you got out profitable, right? So I got out too, and I'm watching this thing run. That's why I'm smoking a joint right now. Because I'm I'm thinking about how much money I left on the table, okay? But again, I'm still happy and blessed that I got in, made some money, and got out, okay? You guys are turning me more into an intraday trader now. You guys are turning me into more of a trader to hold trades with you guys. You guys are converting me, a 1 minute scalper, into a trader that can try to hold trades a little longer with you guys. So I'm learning with you guys. You guys are teaching me. Okay, so you guys might convert a scalper into an intraday trader. But that came to the top of the zone, measured moves. You know, like a carpenter, we're measuring. That's 170 pips up there. And now it's transacting in the full red zone. Okay? You got to be very, very careful in here. Elvis, do I use a prop firm? No, I don't currently. I have nothing against prop firms. I like to trade my own capital. I will do a prop firm challenge for you guys. What is a good one to use? Should I go futures? Apex, Top Step. I see some of you guys talking about that. FTMO. I'm in Canada, so what prop firm can I use in Canada? Funding pips? I'll do 100,000 one. Is that good? Good? Maybe I can trade that with you guys live. I don't know. Any prop are available to Canada? Sergio, I'm in Ontario. So we have strict laws here in Ontario. You know, it's like with the Fusion that I trade with on my live broker. If you're in Ontario, you can't get it. Anywhere else in Canada, you can get it. Is weed legal in Canada? Yeah, it is. Okay, so let's see. We've got a rejection now at the top of the red box. Okay, remember we did it from the point of control of this big bearish candle coming down at 10 a.m. So we're trading right back into it. We basically kind of bought the lowest point of the day and they're returning it right back into 10 a.m. Okay, so now we're starting to see a wick and another wick. So now our buyers going to get exhausted from buying the highs. And then naturally, Frank, I was talking to you, maybe we're going to start to maybe see a leg selling back down. Okay, but it's still holding big blue volume. So this thing still wants to continue maybe to build and break out of here. And then again, if it closes above here, Frank, we're going to have to unfortunately make this red zone green because it still might represent buyers still in the market to continue to push it up. Okay. And we have 1 p.m. opening up in 4 minutes. So let's think now. Like, this is now new hourly momentum. We had this that started at 12:30 coming all the way up to 1 p.m. So we have a strong 30-minute candle. If you look at your 30-minute, wow, holy shit. We basically bought this entire bullish 30-minute candle. It might even close above this zone. This might even extend going into 1 p.m., another bullish 30-minute candle. So we have to be very careful thinking about shorting this because look at what we're going up against. This is a big bullish engulfing candle on the 30-minute that might close above this entire zone that we kind of consolidated. So this could have legs to continue to run up. So guys, I would be very careful considering selling right now. Hold off. Let's see what they do at the start of 1 p.m. This looks like a massive, like, inverted head and shoulder, in my opinion. Here you got your big left shoulder. There was the inverted head, the dump, and then we kind of bought it up. So the V-shaped recovery. We're trading right back in the red zone. So if it comes back in and consolidates here or here, could kind of finish off the right shoulder to continue to drive out of here later today. Okay, so now it's came up, getting rejected again. So we didn't have a blue candle close above, so we can't make this a red to green zone. It's still technically red. So if we see black candle coming down, remember, it could be there could be buyers at this red line, 39.81.80 could be support, where it was resistance, 50% could be there. More support could be right there at the opening balance at 39.80 and then our block right below us. And then if you really want a deep pullback, it's exactly where we bought in down here at 39.70.71. I'm just leaving this blue. Do you want me to get rid of this blue? I'm no longer in the trade, just so you guys know how high it went and where it went to. And just so you guys can consider, if you were in that buy and you didn't do anything, I want to leave that there for like a lesson for someone. Okay, now you see we're coming back down with a bear shooting star candle. So will this come down, trade into about 50% or right there, get a higher low and go back up? Will it be some type of spin top consolidation? Will we get a bearish bar closing back below here? Then maybe, Frank, maybe we have some legs to continue to push down a little bit. But if we're selling into buyers. So remember, we're now then counter trading the move back down. So guys, I want to ask you guys a question. In Zoom and YouTube, be honest with me. What YouTube channel do you guys watch that does what we do? Like live trading every single day. Guys, I just took a little bit of break of YouTube last week, but we'll be back. So I'm talking Monday to Friday, all sessions, like if there's London, New York, Tokyo, whatever, live trading, live analysis. They offer like a great Discord community. You know, they're there genuinely to help out traders and not lifestyle. I don't care about lifestyle. I don't care about what type of cars they drive or shit like that. They're education-wise. Put in the chat. I want to watch some of their YouTube channels and see what they do, maybe to see what I can improve on and how I can make myself better, okay? Lorenzo, yeah, Lorenzo, we've had Lorenzo. Lorenzo gave us a shout out too. Lorenzo, yeah, I've watched his channel too. Yeah, awesome, guys. I wanna have a look at what they do, maybe what we could do a little different, how we can improve ourselves. Okay, So now we see there was a bullish spin top candle, but you see kind of how the buying volume is kind of thinning out, right? It's thinning out because we're trading in a red zone. Does that make sense to you guys? Our buyers are getting exhausted. Maybe they're continuing to buy, but there's a lot of offers in here. Okay, there's maybe more offers than there is buyers, and that makes complete sense. It's a red zone. So traditionally there might be more sellers in there. And now I can see a lower high, and a lower high. So just with those three candles, I can see that we're kind of descending down, right? So again, if it just comes down here, that would be an impulse break, like this black candle. I like scalping those things, don't get me wrong. There's 4 more minutes to go on it. But remember, I made a mistake yesterday in yesterday's call of scalping, and I took a scalp on the with 4 minutes remaining. It came down just a little bit, got a wick, and then it turned back up on me. So again, that was going over the blog, how you can learn a lesson. Do you want to do that lesson again or wait for it? But if you're looking to sell, it's breaking down right now, but I'm going to look for confirmed volume to close below here. So I see now lower highs, lower highs, lower highs. I see a new lower low, and now it's pushing down. So it doesn't surprise me that we came into this zone and there's sellers there. Is it going to be an elevator coming all the way back down? I don't know. But right now, you see there's a momentary pause in this block. So, okay, enough with the YouTube, guys, okay? But now I want to know, education-wise, what we do here. Do you guys understand why we're getting a little pause in buying volume right here? You have to understand that, okay? It's part of your education here. Things don't go up forever, but you got to understand what the market is doing right here now. It's consolidating, you're right. So we got now buyers and sellers right in here. So it could go kind of either direction. So it's back in like a consolidated. We got the spin top candle. Remember how nice and bullish our volume was coming up? Now we got this shitty volume again. Look at these spin top candles. I hate trading these things. These are those pause candles. Will, the more you repeat yourself daily, the more we'll nail it. Absolutely. So, but we're here teaching every single day. We just need you guys to like what we do, subscribe to the channel, maybe share our channel with other trading communities, get us excited to come here and do this with you guys, and hit the subscribe button right over here. Let's grow this thing together. We're 2 subs off of psychological 600. You guys can't leave me hanging. I'm sure there's 2 people on here that haven't hit the subscribe button. Get it to 600 and makes me happy. And also, guys, continue playing Tetris. This game over here. You'll learn a lot. If you guys understood why I took that trade or this, I play this game a lot. It teaches my brain how to think fast. Oh, did we get it? One more, come on. There's one more that is lazy, that can't hit that. You can hit the buy button, no problem, but you got to hit that subscribe button here too. There we go. Thank you. I appreciate you guys. Now let's watch the close of this candle. Aldine, amazing. You made 1,000 with that scalp strategy a couple minutes ago. Can't say thank you enough. You don't need to say thank you. We appreciate you. I just don't like talking in dollar figures, $1,000. I know $1,000 is a lot of money, but we want to keep it the language of trading with percent or ticks or pips or points, okay? Money, you know, it does. I don't know if you're trading with $1 million. I don't know if you're trading with $1,000 and you just doubled your account. So, but percentage, pips, we all understand that, okay? Or we talking pancakes with real Canadian maple syrup. Okay, so I'm going to ask you guys, are we surprised that this is coming down in this red zone? If you did not do anything profit-wise, like I'm showing you, this is where that now you're giving money away back to the market when you didn't need to. It traded right into that block. It's not like we just made this block now. We had all of these zones prior to even taking that trade. So, Frank, see now, I'm picking on you, Frank, and Zoom because you were asking me when to sell. So we got to wait for the buyers to come into here, and then you can see how they're getting exhausted. They're getting tired. And then now we know that there's more sellers there. So then we can maybe engage in a sell. But this is the first body that closed below. So maybe it needs to technically come back up and retest and then go back down. Otherwise, what you need to be doing is, that's a big body candle. You need to start cutting that candle in half, right? Because it could come up and test the 50% or the point of interest of this candle. And if you took a sell, like guys, no, hypothetically, let's say the white line right there, 50%, and you went down, you were up 45, almost 50 pips now. So again, if you had your stop loss like above here, you could go to a break even, because if this comes right back up really strong, you don't want to go into drawdown. Okay, guys, there's nothing wrong with break even trades. I know it sucks, but you don't lose any money. That's why we trade. We trade not to lose money. And then, guys, you see how it's all lined up. Big buyers right into the red zone, hourly. And then look at the hourly switch up. 1 a.m., now they're switching it back up. So when you look at the 30 didn't have gas enough to continue to drive. And look at how now they're bringing it right back down. So we're right back in the consolidated zone where it's bearish, bullish, bearish. We had that big dump. We bought that big come up candle, but now it's coming right back down. So, guys, that's it. You know, like, you got to respect these zones. If you don't, this is what can happen. And we don't play the would've, should've, could've game. Yes, this trade could have gone higher and higher and higher, but you got to break through this block in order to do that. Now look at this. Sellers are coming all the way back down. So they gave the buyers an opportunity to close at the highs. Now sellers are coming in. So for all those patient buyers that want to buy at this block or down here, the market is coming back down to you. So all those FOMO traders that bought up here, that's the rule that we don't want to do in trading. It's the worst rule. It's always just going in at the highest points or selling at the lowest points. You have a high probability you're going to lose. So stop trading like that. Reverse it right now. Put it in your head that you're never going to trade the highest points in red zones and not to trade the lowest points at lowest points of the day or red zones. Just understand those rules of trading. Just like baseball game has rules, a basketball game has rules. There's rules in trading that you have to follow as well. Otherwise, you're playing a game with no rules. And then it's not going to make sense. Just like if we play a game of basketball and you guys are all double dribbling and traveling and no one gives a shit about the rules of basketball, the game is going to be stupid. It's going to be dumb. You got to follow the rules of the game. And there's rules of trading. Okay, guys. But guys, I have to wrap up the call today. That's it. I hope everyone had a great call. I got a few things to do this afternoon. Tomorrow, guys, is a tentative FOM's NFP. Remember, government is still shut down unless they do something or they announce that they're going to release this. But you see, they even took it off of the schedule. Okay, so it was here at the start of the week. We had it at the start of the week, and they've taken it off right now. So there might not be an NFP tomorrow. Okay, so just understand that we're still under U.S. government shutdown. So all U.S. events are subject to delay, revision, or cancellation. I think we're in the 36th or 37th day of shutdown. I don't know but exactly what it is, but I know we're still shut down. Guys, everyone on YouTube, there's a free Telegram channel pinned at the top of the channel. Join it. You get all of our live sessions that we do here, trade recaps of the buys and sells. Guys, tomorrow's the final day if you want to join in the risk management bootcamp we're having this weekend. It's $100, but you also get a 1 month membership with us, and you can join that. And it's going to be recorded and it will be uploaded to the website. All lifetimers are included in it, and we'll have that done this weekend. And guys, shout out to everyone in the Discord. Amazing job today. Please continue, guys, sharing your analysis, your charts. Share with the group. Crippy, amazing, bro. Almost a 2K day, unbelievable. Jimmy, one of your best trades so far. Congratulations. Please, Jimmy, if you're listening to me, go back and take 30 minutes out of your day and review this trade. Review this, what happened, why you took it, what you can learn from it. You can even learn from profitable trades. You can learn from everything, guys. Congrats to what you guys are doing, and let's continue to be focused, disciplined, and let's hopefully be financially free to all of us. Bless. I hope everyone. Times are tough. We're losing a lot of jobs around the world. Okay, and it's getting tough, guys. You might lose your job. You might get laid off. Your neighbor, your friend, your family member. Okay, so trading, you can learn and make money every day, but you gotta learn responsibly how to do this. It takes a lot of time and hard work. Okay, guys. We'll see you guys tomorrow. I'm gonna do a post New York session tomorrow. So if you want to join the group, we'll have some fun tomorrow. And guys, have a great day. I hope you guys learned something from this trade. And we'll see you guys tomorrow. Sorry I didn't finish up the NASDAQ analysis. We'll do that tomorrow. But have some fun, guys. And you see right there, so sellers brought it down. Didn't come into the block, closed right there, retesting this. Again, you see how the red line is playing in right now. That was 50%. It turned to support, still holding support. So if you sold, you can see now they're building a little bit of a neckline, a little bit of consolidation. As it came up right there, we've got equal highs. So they didn't even push it up another high. So sellers might continue to push this down or consolidate coming to this block. So I wouldn't entertain trades inside here. I would be more focused on this red zone. Again, see if it closes above, or you can retest it or continue selling. And I would be more focused on buys in this green zone or down in here. If you're trading in this area, you're trading in no man's land. Look at what you're trading in, where it was here, 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 here. You're back in the same exact zone. This is I like to call this the shit zone. This is the zone that will frustrate you and annoy you, and there's just little accumulation by all the bots in the background, and you are getting confused, frustrated trading this shit. So focus on your zones and let things accumulate and continue coming down. Okay, and then the bigger picture is maybe this is a big bottom so far, so maybe the sellers will indeed push it back down. There's one leg down. We came with that one nice leg up that we bought, and then maybe it's consolidating. But if it comes back down, let's say right there could be a nice higher low buy, maybe a double bottom near the lowest point of the day. That could be that second strong leg up. But when you're coming back up, you got to get through this zone. That would be red. You got to get through this zone again. That would be red. Then you got to come back up to this major, and there's your big W. Then again, you got to break through it, come back, retest, and go through the motions. This is how I play ping pong all day. I told you guys I play Tetris all day, but I also play ping pong all day. I like to take trades from here, get some money. If it goes back up, get some money. If it just plays ping pong. But when it's in this area, I stay away from this shit, because I know it's very, very difficult. I know the market is accumulating both sides right now. Eventually, you just got to be patient. It might redistribute it back up through here, or it's going to bring it back down in here, right? And then you just trade with how the market is moving. Just follow it slowly. If you want to trade in here, that's why I always say take feeler trades. If you're feeling out a buy or feeling out a sell, if it goes against you, it's a small loss, no big deal. Price of a coffee, you can recover. But if you're going big and you're trading inside here and it goes against you, you could lose a lot of money, and where you shouldn't even be trading in this area to begin with. Okay. So thanks, guys. Appreciate you guys. Also visit our website, stocksnipertrading.com. We give you a lot of free information. There's free blogs. Okay, there's a lot of blogs on here. There's that one we just did, lessons learned. What is a point of control? So you guys see most of my trading today was figuring out where these point of controls are. Read that blog. Trading Tokyo sessions. Next week, we're going to be going back into Tokyo sessions alongside with a couple of New York bonus sessions. So read over Tokyo. Because gold trades really well right now in Tokyo. So we'll be coming back down to, someone asked me, what is a US government shutdown? Here it is. Read this. Here's the blog for you. Okay. And guys, enjoy the rest of your day. I hope you had some fun. God bless. We'll see you guys tomorrow. Thank you guys so much for joining. Please hit the like button, subscribe to the channel, and we'll see you guys tomorrow. Have a fantastic day. Enjoy your Thursday, and we'll see you guys tomorrow, Friday morning. Have a great day. Thank you. Thanks, guys. Have a good day. Hopefully I broke down that buy on gold for you guys. If you guys have any questions, give it a shot, ask. Anything that you want, if you're unsure about. But hopefully we had some fun and we learned something. Okay? Have a good day. Boom. Thank you, Justin, Eli. Have a great day, guys. Sang, Christoph, thank you, guys. Enjoy your day. Danny, have a great day. Frank, take it easy, guys.
Hey guys, good morning, welcome to the live session of Stocks Number Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell it, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.